Welcome, everyone, to the Top Women Traders webinar. We are so glad that you can join us. My name is Tracy Ball. I am one of the mentors at Real Life Trading, and I'm also the co-host of the Pivot podcast, as well as a couple other podcasts out there. So feel free to look for them out there. And I am just as pleased as you are, Dean, to be co-hosting with you. I think you're amazing and awesome. And yeah, you never know what's going to come of this. So, Dean,
Brilliant.
Introduce
What a phenomenal
yourself.
introduction. I don't need any introduction. You did it for me, which is phenomenal. But yeah, hi, I'm Dean Bradshaw. I'm one of the co-founders at ROT UK in Europe. Feel free to check us out if you're interested in learning how to trade the markets. And we do have some free courses also. So yeah, I'm just excited to hear what the presenters have today because I know the lineup and I'm excited. And I have my pen to hand because I'm going to take down some notes.
Yeah, we've got a lot in store here. But before we get started, let's get rid of this little guy right here, the disclaimer. Feel free to read through it. But basically, what we're just saying is that you're responsible for what you do. We aren't. This is just educational purposes. You're the one pulling the trigger with anything that you trade. This is not stock advice. This is not investment advice. This is just educational purposes. And yeah, that's pretty much it. So read through the disclaimer and we will get started.
Perfect.
Take it away, Dean.
Well, here we are. RLT is a global movement, and the guy with the beard started it all off. For those of you who don't know him, Jeremy Alexander Newsom is a phenomenal educator in terms of the stock market. He's an unbelievable trader. I've had the fortunate ability to trade side by side with him. Myself, the next one next to him with that silly green is obviously me, and Josh with that bad wallpaper behind him. We are the co-founders of ROT UK. So ROT US is ROT. It started off in the US, and now we're branching out into other countries just to try to enrich people's lives via the stock market and how to trade it sensibly and risk-free.
When did you start the British version, the UK version?
1 year ago. Actually, 1 year ago this month, which is phenomenal. And we've been going for a year, so people must like what they see. Probably because I have less video time now. So there was a distinct, we got more subscribers the less I was on video, which, okay, I get it. But yes, it's been a great journey, a phenomenal journey.
Hint taken. Well, you know what? Why don't you throw some of the locations that you guys are watching us from? I'd love to know where you're coming from and where you're located and all that kind of stuff. So throw them in the chat so we can see where you're coming from. And yeah. Today's speakers, we have some amazing women in finance that are up. Some of them I know personally, some of them I don't. I'm looking forward to hearing what they have to say and getting to know them, but I think they're all fantastic women with a lot of value. This is going to be an incredible summit for you guys. So stay tuned for all of them. I think that you're going to get something different from each and every one of them.
And also, it's not just for women, right?
Exactly.
It's not just for women because these people can trade better than me. So I'm ready. I'm ready.
No, there's something for everybody in here. They're just women presenters, which I think is phenomenal because we have a different perspective on things. And when you get a different perspective, you have an opportunity to grow your learning and grow your knowledge and take it to the next level. So today's topics, Dean?
Yeah, so we're going to be talking futures and the futures market with Arabia. Now, have you traded futures before, Tracy?
Oh, yeah, I started in futures. Love it. And I'm hoping at some point I will get back to it. So
yeah, me too. I started in futures and I've actually been fortunate enough to have some coaching sessions with Arabia. So it's well worth to listen to that. I was right at the point where I stopped trading futures because it was like a gamble for me. Because I really wanted to see if I got assigned cattle, if they would actually deliver them to my. So it was like, should I? And I thought, no, this is a bad move for me. Let's go into something else. But so yeah, I'm looking forward to seeing Arabia's presentation on futures.
Wow.
This is the best one for me. Day trading with good risk management, and that's from Maloney, right? Who is phenomenal at day trading. So I'm excited for that.
The trade bullish and bearish with equal confidence. I think that's also something that a lot of people struggle with, particularly the bearish side. A lot of people don't even know that you can make money on the bearish side. So I think that's going to be very eye-opening for a lot of people. And awesome. Forex with good risk management. I mean,
yeah.
What's a pip?
Well, exactly. And if you don't know, go over to Real Life Trading because I did a whole course on it and it's free. So, yeah, I love Forex, but I'm from the UK. So, Forex is huge there, right? So, which is cool.
There you go. And I like this one, developing a strong trading plan and learn what it takes to be profitable career trader. I think that's great. Any business, trading is a business. And if you have any kind of a business, you need to have a plan. And I think, again, this gets overlooked extremely often. And I think that getting that strong trading plan in place and understanding what it is and how important it is going to be good. So looking forward to see what this has to say. And,
yeah, because again, I like that whole process, right, of having a trading plan because it's like a business plan. And, being an entrepreneur myself, I always find that the most entrepreneurs make good traders generally. So, but now, except for myself, but other entrepreneurs do really well at trading.
There you go. There you go. Looks like we got a lot of people coming from the United States right now. Is there anyone from Europe? We've got somebody from India. There's London. Okay.
Nice.
Well, welcome. Excellent. That's awesome. I don't have access to the YouTube chat. I think, Josh, do you have anybody from anywhere else? Portugal. France. Nice.
Good countries.
Missouri. Perfect. North Carolina. Awesome. That's great. Well, welcome, guys. All right. So do you want to take the Audacity partnership sponsor? We have a few things that we need to discuss there.
We do. So Audacity, I actually know very well. They're actually in the building where I used to work when I was working for Barclays Capital a long time ago. So I know the building, but brilliant sort of funded account situation. So if you want to try and get into Forex trading without risking your own capital, but you want to have live money on the table and the potential to earn some profits, then I think Audacity are the way forward, really. And unlike others, which I won't mention their name because Audacity are one of our partners, but there's no steps in place. It's an interview process. And if you pass the interview process, then you get funded. And what a great way to start.
And they do have considerations. So you have to be considered for the program. You must have the ability to manage leverage consistently, keep account drawdowns under 10%, and demonstrate consistent profitability with strong risk-reward management. The costs, a one-time joining and administration fee of 199 lira. Is that right? Or is that pounds? What's that little
pounds.
That little symbol?
What, you don't know what the Great British Pound symbol is like? Wow. This is crazy. Stop the webinar. This is crazy.
I'm just teasing you. A monthly platform fee of £99, which covers the cost of the institutional liquidity provider, allowing traders access to tight spreads and predictable liquidity. Use the link provided in today's webinar for 10% off and to learn more about Audacity Capital. Drop link into the chat. So do you have the chat link? Josh, if you can throw that in there, please, for everybody.
Perfect.
Awesome. All right. So 24/7 Wall Street, that's another one of our sponsors. And it's a popular United States-based LLC, which runs a financial news and opinion company with content delivered over the internet. The company's articles are republished by many of the largest news sites and portals, including MSN MarketWatch, USA Today, AOL, and newspaper and broadcast sites across America. The company publishes over 30 articles per day and has readers throughout North America, Asia, the Middle East, and Africa. Make www.247wallstreet.com your first stop when researching the day's investing news and beyond. And Josh, you'll throw a link in there as well for that. All right, Dean.
Yeah, so we've got this partnership with Motherhood Moment, which again, it's being a top women's webinar display. I didn't know what word to use there. Did my brain fail me? But yeah, this is a great. It's a person who has a blog, which is brilliant for any sort of environmental advice, how to save money, any freebies and coupons. And it's a great way to just literally log on, and then it's all there for you collectively. So do check that out also.
Perfect. Oh, that's awesome. Right, our agenda. So we are going to be starting off very shortly in about 9 minutes with
Awesome.
with Arabia Johnson, and we'll introduce her a little bit further. But listen, Dean, Forex, is that the only thing that you trade at RLT UK, or do you guys trade the indices? Do you trade futures? What do you do?
Well, we trade everything. Apart from futures, I think that's the only thing we don't trade. But personally, I trade Forex in the morning. I'm a big fan of the London breakout strategy, which I developed, so go check that out. But I also like to trade options. So I like to do the option wheelhouse where I buy 100 shares of a company that I'm interested in, sell some calls against it, get called away, and then rinse and repeat, sell some puts to get put to shares again. So that's my two strategies that I use on a daily basis.
That's your Tuesday. And what time do you finish in the day? Because it's actually middle of the night right now, isn't it? Where you are?
Well, no, it's actually 20 past 5 in the afternoon because I'm in Spain. So it's confusing enough, all these time zones, ROT UK, London boy, lives in Spain. I know, I'm confused all the time. So yeah, I normally finish trading around sort of 10 p.m. at night, but put in the work and the results are there.
Perfect. And your favorite trading indice is Forex?
Yeah, I say Forex, and I particularly like the GBP USD pair. That's one of my favorite pairs to trade. And I know apart from that, then it's just sort of longer term stuff that I like to buy, and then just try to collect some premium interest to create some cash flow.
That's awesome. And one more question for you.
Yeah, let's do it.
This summit, what are you hoping that people can get out of it?
Well, I think ultimately it's some education around what the markets are and how they move, and they're not as scary as some might have you to believe. But personally, I think it's great to see women in a power opportunity, because I'm a great believer that everything's achievable if you can see someone similar to yourself doing it. So and I think if that is the only takeaway from this, then I think we've done our job. And just so everyone knows here, every person on this trading webinar is 10 times better than me. And I've had coaching sessions with you, Tracy. I've had coaching sessions with Arabia, Maloney. I've had sessions with Sochi, and I'm telling you, every single one is better than me. So let's just spread the word.
So you should be magnificent then if you've taken coaching from all of us. I mean, you should just be absorbing this. What is that saying about you?
Yeah, exactly. I don't know if it's my ADHD, and okay, I'm going to do this today, and then I write a list out 1 to 10, and I start with number 7. Don't know why that is. That's just the curse of ADHD, I think. So I'm trying to be more scheduled this year. That's the plan. I had a good chat with one of the co-founders of RLT US, Matt DeLong, and we had a great session where he's told me to structure my day, put it in the calendar, and it's working really well. So.
My goodness. Are you like the squirrel looking for the different shiny object? Let's go from mentor to mentor to mentor. And
yeah, that's exactly it. Like it's like like a dog. If he's got a bone and he looks into the river and he thinks, I want that bone, and he goes to bite it and his current bone drops into the river and there he's got no bone. That's me.
That's funny. Well, we have a very wide range of experience on the panel today, and right from 25 to 30 years of experience, right up to more contemporary, starting in the last 10 years kind of thing. So there's a great spectrum of market experience here today. And like I said, everyone has value. You're going to grab something different from every single one of these people. So it's going to be awesome. Right now, before we get started, we have about 5 minutes before our first presenter starts. Is there any questions that you guys have for either Dean or myself? Throw them in the chat right now. We can answer them. Let's see where it goes. So other than that, Dean, can't wait to see your posts. Oh, that was Arabia. Yeah. Are you going to be posting anything, Dean?
Well, only what I hear today, just repeating it and trying to claim it as my own. That's it. Yeah. Spitting knowledge to the rest of the world, but really I'm just feeding it from everyone else. That's it.
There you go. Now, is this webinar going to be something you guys do every year?
Yes, every year, 100%. This is what we're looking to do. So our new format for RLT UK is to do one webinar a month, and it'll be like different every month, but the women's webinar every single year. So we're hoping that you will come back to me, Tracy, but that's all dependent if I get a slot on Pivot Podcast. So
Okay, so a spot on Pivot Podcast, or you just want to be a guest on the Pivot Podcast?
Yeah, no, I want to be a guest. Yeah.
Well, you're always welcome as a guest.
Okay, then I'm in. This is done.
You're always welcome. Always welcome.
Josh, get the contracts out.
Yeah, for sure. No, you're always welcome. Absolutely. I'd like to know who is excited to hear Arabia Johnson coming up. Let's throw a big 1 in that chat. Actually, let's put a 1.6. A 1.6 for those that are interested in. Oh, yeah, we've got a lot of love showing up right now for Arabia Johnson. Absolutely. Now, Arabia is one of my favorite people in the whole wide world. She is an incredibly, you know what? I'm going to say that she is a fine glass of wine or a fine bottle of wine. Her humor, her personality, her freshness is just the icing on the cake when it comes to her knowledge and her presentation style. And she's young. She's young with a ton of energy. She has such a bright future in front of her. And Dean, what happens to a bottle of wine as it ages?
It only gets better. Believe me, I know.
Exactly. Yeah, exactly. So pay attention to what this girl has to say, because I tell you, it's going to be amazing now. Follow her because, like Dean just said, a fine bottle of wine is just going to age and get better. And that's what's going to happen with Arabia Johnson. She is going to continue to bloom and her knowledge is just going to overwhelm you. So pay attention to this girl. Arabia, feel free to take over. You can start at any minute.
Also.
Perfect.
Unmute and surprise. Hello, everyone. Yeah, I'm super excited to be here. Thank you so much for that amazing introduction. I've never been compared to a bottle of wine before, but I'm here for it and I love it. Yeah, so let's get right into it. What I am going to do is actually go ahead and stop the video so I can kind of hide behind these slides here and not take focus away from what we're talking about. So I'm here to talk about futures and trading OPM, which if you're not aware means trading other people's money. So basically, quick little bio on me. I did not come from wealth. I don't have wealthy parents. I'm actually adopted. So like on the spectrum of the tools that you were born with, I was born with basically no tools. And I still managed to take control of my financial future and my life through the futures market. And I created all of that out of nothing by using other people's money to create cash flow for myself. So if you're interested in that, stay tuned because it is going to be awesome. We already did the quick disclaimer. I'm going to be talking about real money and all this and that. So, don't place trades unless you are willing to lose what you put in. So I'm 31 years old. I joined RLT about 4 years ago, going on 5 this year. I started trading with options, basically weekly options, and I was just trying to create cash flow. The reason why I started with options was because they're super cheap. So, if you want to trade Tesla, but you don't have, thousands and thousands of dollars to get the amount of shares that you would want to actually form a nice position, you can then use options, which are cheaper, but very, very volatile and comes with their own caveats and things that you have to learn about trading options. Do you think that I took the time to learn how to trade the options? No, I did not. So I ended up blowing a bunch of accounts, like seriously more accounts than you can count on hands and toes. And then someone came to me from the RLT community and was like, hey, I think you might be interested in futures. So basically the reason why she offered futures to me as a solution was because they're similar to options in the sense that they are highly leveraged, but they do not have option Greeks, which is what was killing me, the Greeks part of the trading. So once I discovered futures, I also found a way to trade them using other people's money, never looked back, and now I'm a full-time trader, which means that I trade from 9:30 in the morning till 11 and call it a day, go on and live my life. So why was I so unsuccessful with equities? Trading is super, super personal. It's very personal for every single person. So you could be sitting right next to someone who is the best equities trader in the world, but it just doesn't make sense for you. It just doesn't work for you. And that's okay. I'm here to tell you that that is okay. If you're struggling, it might not be because you just don't understand trading or whatever limiting belief that you throw on it in your times of panic, right? But it could just be that you're trying to trade the wrong thing. So let's take a look at this. Personally, with options trading, was not a fan of the overnight gaps in the market. You can't lock in your gains with options overnight. So you could be in some calls that look absolutely beautiful, and then we gap down. So you spend all night watching the futures just tank. And you're like, oh no, like by the time the market opens, where is my option premium going to be? In the toilet, usually, for me, was the answer. Watch lists. I only traded like 5 things, right? So Facebook, Apple, the SPY, MU was on my watch list. And there was one other thing that I can't remember now because it's been a few years, but 5 things on my watch list. And no matter what, if I wanted to play Facebook bullish that day, it was the day to play Apple bullish and Facebook was going to tank. And it felt like no matter what I did, I always picked the wrong ticker on the wrong day. So watch list, not a fan. Greeks were my personal Achilles heel. I just mentioned that. Option Greeks, I find it difficult. Burnout, tracking a bunch of news on all the different companies and trying to keep up with all that stuff. I was experiencing a lot of burnout personally. And then earnings season is tough to wait for. And I feel like it's tougher to trade. You wait all quarter for this time in the market when all stocks are going to be moving like, all crazy with tons of volatility. But then how do you trade that, right? Because this only comes around once a quarter. And so, yeah, I wasn't a fan of that whole setup either. So with futures, I can enter and exit virtually 24/7. We'll talk about the full spectrum of the times that the market's open a little bit later on. But pretty much if you need to get in or out, you can do that. The volatility and range makes it possible to trade just one market every day. For real, guys, I have not taken a trade on anything other than NQ, which follows the tech market, in 2 years. I only look at that. That's the only thing I trade. No Greeks. You have the leverage of options, but it moves like a stock. And we'll touch on what that means in a little bit. News delivery. I don't have to worry about tracking news on individual names anymore because anything that's going to move the market, CNBC is going to push that bit of news right to my cell phone. You can use literally any news delivery service you want. It really doesn't matter. I just chose CNBC because they seem like on the surface to be the most non-biased out of the options between CNN, Fox, blah, blah, blah. But this isn't about politics really at all. It's just the news that I prefer. It doesn't matter though. And momentum. So your global news, your economic releases, they're going to be more frequent. So instead of waiting for earnings season to get a big move, you can take a look on your global calendar and check out when the next economic release is going to be. You generally get like 3 to 5 of those every 2 weeks. So you're definitely going to have a lot of opportunity there. So futures are for you if the New York Stock Exchange time zone is challenging. So if you're not on the East Coast of the United States, then NYSE time zone is probably kind of a pain in the butt for you. Futures could be a super solid solution. If you work during the US market hours, like full-time job status, like 9 to 5, something like that, then futures could be for you because you can trade them in the evenings and overnight. If you're limited in your stock trading account by PDT or the pattern day trader rule. I know that it applies to US traders. I'm not sure if those across the pond have to worry about this. And if not, then you're so lucky. But in the US, if your trading account is less than $25,000, you can only take 3 day trades round trip in a week, I believe. So if if you take 3 trades by Tuesday or Wednesday, then you have 2 whole days that the market's open that week that you literally have to just watch trades go by. With futures, you do not have PDT. So you can take any trade that you can afford to take. If you can do second grade math, then you can trade futures. Because it's contract trading, the math around it is easier because we can all count by the quarter up to $1, right? And if you're interested in risking someone else's money to create cash flow for yourself, then futures are definitely 100% for you. So what are futures? Futures, straight up, are commodities. Commodities are, the building blocks of society. So, all of our basic materials, precious metals, oil, lumber, fruits and vegetables, you got soybeans. Basically, if you need it to create a recipe and then create something else, it's a commodity. It's basically the ingredients of life, is how I would really describe that. So we're going to take a look at a quick, brief history on futures. I promise it's really, really interesting and it's not boring at all. So back in the day, farmers who could afford to would lug all of their crops to Chicago to sell door to door. Now, this happened at the same time, right? Like crop season, everyone gets there at the same time. And we'll talk about what afford to means in a second here. But basically, that causes massive oversupply. And it forces farmers to sell at a loss, because why would I buy soybeans from you at $6 a barrel when I can go down the street and buy it from Joe for $3 a barrel, right? So there was also no regulation, and that means that buyers were often stuck with bad crops. There was literally no win in the way things were done before. Everyone lost. Farmers lost money because of oversupply. Buyers lost money because they'd get halfway through a barrel of soybeans or a grain or what have you and realize the rest is rotten, and it was terrible for everyone, and it was a non-functioning market. Farmers then had to promise next season's crop as payments for seeds to sow for the upcoming season. So remember, they sold at a loss. So now how are they going to plant for next season? They have to go and promise their next crop that they haven't even planted yet so they can get the seeds to then plant. Like, how are you making any money that way? You're obviously not, right? So now whatever crops that the farmers are left over with, they're just going to dump them in the streets, or they're going to dump them in Lake Michigan, and it's just going to sit around and rot because they didn't make any money. So they clearly don't have the cash to transport them back home, right? So all of this drama caused huge price swings in the grain market, especially in the off season. And the farmers never got ahead. And instead they man, that's a tough one. They perpetuated their debt year after year, just a solid, vicious cycle. So then in 1848, the CBOT was formed, and it was basically just a group of businessmen who were like, enough's enough, this isn't working. And so they all got together in a room above a feed store, and they started just setting basic parameters. So they standardized units of measure, they ensured the quality, they offered crop storage, and they also issued a receipt. So that was a game changer, because now instead of having to lug their entire crop door to door like a Mary Kay salesman, farmers could just show up in Chicago, drop off their crops at the CBOT, get their crops, checked over for quality, leave their crops there, and then just take a little piece of paper with them to go and show buyers. And buyers are elated because now they can see the weight, the quality, and the price of the crop right there on the receipt. So it's better for everyone involved, right? And eventually, savvy investors took notice of the money that was being made and the ease of it. And they, even though they had nothing to do with farming at all, they started to buy and resell those CBOT receipts. And then this took off. Other brokers started doing it. Other brokers started accepting the receipts. And now the futures market is born, and you can trade literally all kinds of futures currently. So like literally, I would have to put 8 slides in here to list all of the things that you can trade in the futures market. But you can trade pork bellies, corn, wheat, precious metals, random length lumber, crude oil, the indexes, which are boldened because that's what we as day traders really focus on, the financial indexes, and of course, everything else in the world. So futures versus stocks, like why futures basically? Well, 3 things really come down to it for me. It's the leverage, it's the versatility, and it's the volatility. So leverage in this case just means get the biggest bang for your buck. Here we're looking at the same exact day between the ETF and the futures. So what we're looking at is the S&P 500. This is the SPY, the ETF that tracks the S&P. And this down here is ES, which is the futures that track the S&P. Now you can see on this random day, it was November 24th, 2020. SPY went ahead and put in tip to tail a $4.52 range. $4.52. That's the entire range. That's the opportunity you had for the day. On the same exact day, you can see down here that ES went ahead and put in 64.75 range. 64. I mean, amazing. Incredible. The difference right there. I mean, just in opportunity's sake. Let's say you did manage, because you're a robot, let's say you did manage to get in at the exact bottom and sell at the exact top, because again, you're a robot. You only got $4.52 on that day. If you managed to pull off that same maneuver on ES, you made considerably more. Now, let's take it outside of a robot's perspective, because we're not, right? We know we're never going to be able to get the exact bottom and the exact top. However, how much more opportunity, how many more trades could I have taken on ES this day? You know, like many, many more. So just something to note there. Also, the way that we get to our R's in futures is a little bit different because it's contract traded. So with stocks, ETFs, you're basically going in dollars and cents, right? So every time, the smallest increment that price can move up is going to be a penny. So you have to move basically 100 times for you to get a full dollar's worth of price out of that. With futures, each one of them moves differently, but the two that we're going to focus on today, ES and NQ, which is the equivalent of QQQ, if you're familiar with that ETF, they move in a 0.25 increment. So the smallest amount they can move is already bigger than the ETFs. And because of that, it only takes 4 moves to get your full point of price action. So I know that's a little bit, I don't know, we're kind of floating in midair, but let's take a look at some examples and hopefully I can clear that up for you. So we're going to think back on the range difference between SPY and the ES, right? We had that 452 versus the 64.75. So like we just mentioned, SPY moves in a tick size of 0.01 and the value is only a penny. So if you get 100 pennies, you get $1, right? With futures, this bad boy moves in a 0.25. There are 4 ticks to a point. So in a single point, instead of getting $1 per share, you're now getting $50 per contract. That's incredible. It's incredible leverage. Similar with NQ. So with QQQ, you are getting $1 per share when you make a full point. With with NQ, you are getting $20 per point because the tick value is 5, right? So futures vary in value to price. So you can see here that ES doesn't give you the same value to price as NQ. You're getting $12.50 per tick versus $5 per tick. But none of the futures trade in just a 1-to-1, meaning that at no point, even if the futures instrument that you're trading moves in a 0.01 variant instead of a 0.25, it's still not worth a penny. And a really good example of that is crude oil. Crude oil moves in a tick value of 0.01. A tick size of 0.01. However, the value per tick in crude oil is $10. So it's definitely not 1-to-1, if you know what I'm saying. Versatility. With futures, you get to trade whatever you want, whenever you want, because it's pretty much almost open. So futures contracts themselves can be traded. That's what I trade. Futures contracts do not have Greeks. So that's really, really cool. Options on futures contracts can be traded. Now, those do have Greeks. So if you're already crushing it in options trades, moving over that style of trading to futures could be super, super beneficial to you because the leverage is so much greater and the momentum behind it, the moves are bigger, the range is bigger day to day than any stock or ETF. you can also trade currency pairs through futures. Technically, it is safer than trading Forex because it is FDIC insured. And there have been some Forex brokers who have gone bust and people have lost everything, profit and principal. But there are also really awesome Forex traders here on this call today. So I'm sure they'll be able to take you through the safer ways of trading Forex. So here's just a little example of an evening trade I took. This was years ago at this point. I don't even use Thinkorswim anymore. That's how you know it's old. But basically, it's pretty simple. If you know anything about RLT, if you've been hanging out with us for a while, you're pretty well versed in the way that we trade high wave candles. You get a high wave candle, whichever way the candle breaks should be the way it continues, right? So this was a trade that I set up literally at market open. So that was 6 p.m. in the evening on whatever day this was. Simple high wave candle. I know it's a little bit hard to see because it's below this like purple line, but this little candle right here does in fact have a higher wick and a lower wick. Once the breakout came in on that, I simply just went long the breakout and hit 1R within like 15 minutes. If you wanted to hold for 2R, you would have had to wait another like 4 hours or so. But you know, if you're trading it because this time zone works for you, then you're going to be day trading it anyway. You're going to be watching it. If you're trading it the way most of the people on the East Coast do, or in the United States, I should say, we kind of wait for the night to shape up and then put in an order and then just go to bed because we have our bracket order on. You can't lose more than you've decided that you're comfortable with. And sometimes you wake up to profits. Sometimes you wake up to stopped out. My least favorite is when I wake up and I haven't been stopped out yet, and now I have to make decisions, right? That's my least favorite. All right. So market open is the most volatile time to trade. I think we can all agree on that. Wherever you live, when the market opens is the most volatile time you're going to see it for the day, right? It's basically day trader's paradise. So why not trade the open multiple times in a single session? Only trade the opens. Seems like a cool idea, right? Futures run 23/6. So that means that they do close 1 hour a day in the weekdays for settlement, and they are closed on Saturday. So 1 day a week and for 1 hour a day throughout the week. What that looks like is Sunday night, they open up at 6 p.m. They do not close until Monday at 5 p.m. And then they open Monday night, 6 p.m., and they do not close until 5 p.m. Tuesday, so on, so forth, rinse and repeat, right? So these sessions feature many noteworthy trading times. Each one is going to have a shift in volatility and momentum. And futures basically allow you to trade only the highlight reel of the day. So let's take a look at a full session and you'll be able to see what I'm talking about. So here we go. Right here, we got 6 p.m. This is the Globex Open. This is what time futures open at night. If you're unaware what Globex means, it's simply the exchange that the futures are hosted on, the global exchange that the futures are hosted on. So that bad boy opens up at 6 p.m., bow. Then the next noteworthy trading time is your Asian Open. I believe it's the Tokyo market that opens then. Don't quote me on that, but I'm pretty sure. So Asian market opens, and then you get this nice push of volatility. Price has continued, boom, boom, boom. You can notice, generally you can tell when a market has opened because the candles start getting a lot bigger, right? So in here, we've got like your basic run-of-the-mill Globex candles, not a big deal. And then boom, we get these fatty sausage candles in here. So if you're ever wondering like, oh, is a global market open? Take a look at the size of the candles, will probably tell you. So we come down here and then we consolidate. Then the next noteworthy trading time is the London Open. I love this one. If I'm ever awake for it, 3 a.m. is kind of tough for me. I am usually asleep, but sometimes I catch a fit of insomnia. And if I'm awake, I will 100% trade the London Open because it has amazing, amazing volatility. And then the next noteworthy trading time would be your U.S. pre-market open. So at 6 a.m., some brokers allow stocks to be traded before, the full market open. So generally, you'll see the landscape kind of start changing in between 6 to like 9:30. One thing that's not marked here, but we'll touch on later, are economic releases. They generally happen around 8:30, but it's not something that happens every single day, and that's why it's not on this chart. And then you've got your 9:30 US market hours, 9:30 to 4 p.m. This is what most people think that they have to be around for to make money. But look at all of this other price action here, all the rest of the time. It's just waiting for someone to trade it, and trade it well. So this little area you've got in here, the market is closed. However, futures continue to run. Hedge funds and institutions get positioned in this time. And then they actually close right here at 5 p.m. for settlement. Now, in futures, there is no such thing as an unrealized loss. And what that means is that during settlement, during this hour, your account is going to be either credited or debited in real life for whatever action you took during the futures trading session. So quick example on that. Let's say you were in a day trade on Apple and you took some heat on it, right? And you didn't close it because you thought that tomorrow we're going to go up. So you just hold on to that sucker and you don't close it. Now, in your trading account, it's going to show that you're down on it, right? But your P&L, your account P&L, it doesn't actually hit that until you close that position. You can be in the red in stocks for years. It could go to zero. And, as long as you don't close, there's a potential for it to come back and make you your money back. In futures, the brokers close for you. You do not get to just hold on. Now, that doesn't mean that you can't swing trade. You can swing trade if you're trading your own account. However, wherever the price is during settlement, they're actually going to close you out at that price and then engage a new position based on where you are. So just know that you cannot bag hold in futures. And this is why it's this hour, this 5 p.m. hour. That's the reason. So volatility, make the most out of every trading day. This is an example of a black swan event. Now, black swan events, they generally happen overnight. And what a black swan event is it's something that happens at random that nobody was prepared for that creates huge chaos in the market, right? So back on January 8th, 2020, there was an Iranian missile attack on a US airbase. When that news dropped, we had a massive influx of volatility. Like this whole move down is insane for futures. Like you don't get generally a move this severe in an hour's time. It is very quite severe. Like if you're looking here, this is my 65-minute chart. Just massive. Didn't even look back. Solid volatility. Then the news reported that there were no casualties. Well, guess what happened after that? Massive reversion of the selling. Bing, bong, bing, off to the races, completely overtake all of the selling, and then continue crushing all night long higher, which was absolutely incredible. And what we ended up doing is creating a massive daily hammer into new all-time highs on the market. I mean, I don't know if you guys can see this very, very clearly, but this wick from here to here, I mean, what a stunner. This wick is insane. And then the fact that we not only come up and overtake all of this selling, but then pop a new high on the market, insane, just insane. So much fun. And you could have traded that entire event with futures. Whereas if you were in stocks or, the dreaded options, you're kind of just sitting here waiting, watching, not really able to take part in any of that fun. And if you were with us, there might be a couple people here today who were, but back when this happened, we were actually in the futures trading room on Slack, trading this thing, talking about it, enjoying each other's company, and literally just crushing it. So that was a really good night. But you also have scheduled volatile events. So this is an example of the first presidential debate on September 29th, 2020. This was a crazy trade, and it really wasn't anything special. It was just likelihoods, right? So if you remember, back during the Trump times, certain buzzwords would just shoot the market into a buying frenzy no matter what. It didn't matter where we were on the chart, where we were on the day. If Trump said something buzzy that the market liked, we were ripping. We were ripping. So in my opinion, it was unlikely that we would sell off during the actual debate. And so what I did is I waited for all the day's price action to come in, and I simply bought as low as I could with some sort of, some sort of strength. Like I didn't just buy it as it was tumbling, but once we came in and S-curved and started to put in some bull action, I bought in right there. And that was actually before the market even opened up for the next day, right? So this was about like 4:30, about 4:30, 4:45, basically 4 o'clock when the market closed. Okay. So what I did was I simply bought there and I waited. I put a target up at just below the high of the next day and got it. Simply just got the trade. And if you didn't want to get in earlier, or let's say you're trading a prop firm account, meaning that you can't hold into the next session, you literally could have gotten my entry either way when it retested right at open. So you could have waited till 6 p.m. You would have gotten filled right here. And then you just hold on to that bad boy. Simply take the retest of prior day support and put a target below the high of day, and bing, bong, bing. So I will say, I can't remember exactly if this was the exact high. I think it did go a little bit higher, but shortly after this move, we completely reversed it and we ended up like breaking the lows. So it was a stunner. And I really attribute that to not getting greedy with the target, and just being okay with leaving some on the table, having that target below yesterday's high was really like, I think the thing that really won it for me on that one. Economic releases. So we did mention this earlier. This is just a simple retail sales play on 11/6 of 2020. Economic releases are scheduled blessings. They usually come in at 8:30. Depending on what market you trade, like if you're trading crude oil, it's going to have its own set of economic releases that you have to pay attention to, and those do come out at different times. But if you're playing the financial futures, then 8:30 is your time to be aware of. The most impactful releases inject tradable volatility that usually tests both the closest support and the closest resistance. And this is just a really, really good example of that right here. So on this particular morning, I knew that we were going to have an economic release. We were sitting down at the lows of the session already. And generally, in my experience, if we're sitting at the lows and any type of volatile event is about to happen, AKA market open or an economic release, we're going to try to make a push for VWAP. So once I saw us come down here, consolidate, and start making this beautiful Morningstar reversal pattern, I simply went long, even though it was before the economic release was scheduled to come out, because I had a feeling that in the meantime, we would kind of make a move up. And when the release came out, we would test and then pop VWAP. And that's exactly what we did here. So, let me go back. So if I had not jumped in a little bit early, I actually would not have been filled on this trade. This wick touched my entry, but I would have needed it to trade through my entry to actually get filled. But you can just see here, like how, it's kind of rinse and repeat. Like once you start seeing these patterns, especially if you're only trading one market, you can definitely start to position yourself to take advantage of probable moves before anything really tells you in the chart that it's going to happen, which is pretty cool. So if you scale out and you look at my 65-minute chart here, all I realistically did was I bought low off of the 50 moving average on the 65, and I put my target at VWAP. It's simple. It really was not something that, you had to be a genius to figure out how to do. It's all just buy low, sell high with trading. That's it. So you're probably thinking to yourself, all right, cool, I'm interested. But how do I learn how to trade futures without risking my own money? Because that's what we're here for, right? Prop firms. That is how I created something from nothing. Other people's money is a great, great way. It lowers the barrier to entry to a few $100s because you're just paying to pass the test or the combine or the evaluation or whatever the prop firm that you're working with calls it. It's great for teens. It's great for young adults. It's great for beginner traders like I was. It's great for investors whose capital is better served elsewhere. You have an incredible business going or you're in real estate. Why pull from those successful avenues to create cash flow? You can create cash flow without touching the money that you have earned through your other businesses, which is really, really awesome. It's also excellent for developing healthy discipline and trading habits. Basically, it's simple. You prove your consistency and you get funded. Rule breaks will result in an optional reset of the account for a fee. So you no longer have to go into the market scared that you're going to lose it all, because it's impossible to lose it all. It's literally impossible for you to lose it all. You're only going to lose the account, and then you're just going to jump back in there, rinse and repeat, and get it done, right? All prop firms use different brokers and charting services. So I suggest that you shop around for one that you like before you sign up with a prop firm. YouTube is a great resource for demoing charting capabilities. So like I've had students come to me and be like, I really want to do Apex, but they're only PC based and they've already paid for Apex. And now they're kind of like, well, now what do I do? Well, it looks like you have to get a tablet or something to run NinjaTrader because you already bought it. You know what I mean? So you definitely want to be sure that you know what you're signing up for before you actually pull the trigger on that. And then just to wrap it up, I wanted to give you guys a foundation to go off of when trying to look for a prop firm, because there are so many. So these are the top 2 futures prop firms based on my experience alone. This is my opinion. This is not fact by any means, but this is what I've found through experience. TopStep is the best for training. It's priced really fair amongst all of its evaluation options. It awards you an 80-20 split after the first 5K. So the first 5K that you make, you keep 100% for yourself. And then anything that you withdraw from your account after that is split 80-20. So you make $1,000 in a day, you throw them $200 for the opportunity. Pretty simple. You get a discount on commissions when you trade with TopStep using the Trade of 8 platform, which is really awesome. But if you don't like the Trade of 8 platform, or you use TradingView already and you're comfortable there, you can chart and trade with other selected providers and just hook up your TopStep account. You'll have to go to the website to get the list of all of those providers, because I do not have that list. Customer service is prompt with replies. Now, they might not always do what you want them to do. So if you break a rule and you call them and you're crying and you're like, have mercy, they may not just ignore the fact that you broke the rule. If this sounds like a specific example, it's because it is. This is something that I personally did. So no, I did not get a pass on that account that I blew, but I did appreciate how prompt they were. And how quick it was for me to be able to actually talk to a real person. Because when you're trading and you're dealing with thousands of dollars, you want to be able to talk to a person. You do not want to have to fill in an online form and wait for an email back. Like it doesn't feel good, right? So their customer service is awesome. Their trader dashboard is super intuitive, functional, and it's pretty. And honestly, that makes a difference when you're learning. If you're looking at something that looks like Windows 95, I'm personally already uncomfortable. It doesn't feel user-friendly if I have to go into a submenu of a submenu just to locate a stop order, right? It also has a built-in trading plan, not a strategy, but a trading plan. And that basically highlights, you say how much you're willing to lose on a trade, on a day, on a week. And then you can easily track whether you are following your plan or not. And also the performance stats are really organized and educational. They have this whole thing inside of the Trade of 8 platform, if you use TopStep, that shows you like your most profitable times of day. And it just breaks everything out in like pie charts and graphs. And that way you don't have to like seriously sit down and write and like actually trade journal, because that can be tedious and many of us stop doing it, right? Apex is who I trade with now. They are the most sustainable. They are priced fairly for the extra features that they provide. They do give you a lifetime license key to NinjaTrader, which is an incredible value. It has a better profit share. So you get 90-10 split after the first 10K. So you make your first 5K, you pull that out, you're good. You make another 5K, you pull that out, you still get to keep all of that. And then anything you pull out of your account after that is 90-10. So you make $1,000, you toss them $100 for the opportunity. Pretty sweet. I'd do that all day. Every day, all day, I would do that. It has notably less rules than TopStep does. The only rule is don't blow the account. TopStep does have more rules, but we can get into that in the futures course later on. It has wider risk tolerances. So if you use a $150,000 account with TopStep, I believe they give you $3,000 of risk. In Apex, same account, you get $5,000 of risk. So it opens you up on that level as well. It also allows you to have up to 10 linked accounts, which means that, let's say you're a trader who trades like, I don't know, 3 contracts. You could trade just 1 contract in each one of those accounts. And now you are earning as you would on the 3 contracts in 1 account, but you're taking a lot less risk to get there because you're only opening each account up to 1 contract's worth of risk. And of course, it's linked. So anything that you do in that 1 account is going to automatically adjust orders and all of that amongst all your other accounts. Super cool, guys. It's really, really cool. Also, your trailing max account risk may take some getting used to with Apex because it is formulated a little bit differently than most prop firms out there. But again, we can get into that. Make sure you know what you're buying before you buy it. And your dashboard and performance stats are clunky. Now, just because I'm with Apex doesn't mean I'm going to sit here and just sing its praises. Their performance stats are clunky, bro. Like it looks terrible. The system for reviewing metrics is just outdated. You have to go into like all of these subfolders and subfolders and subfolders. So that is one thing. That's why I say that Top Step is the best for training, because you don't have to worry about like how to actually use the program, right? You're just focusing on the trading because everything else is really intuitive and done for you. Whereas Apex, you might spend a little bit more time trying to figure out how to actually use the program itself, like NinjaTrader, and how they link that with all your other stuff. So yeah, that is my take on those 2. So if you want more, you can add the RLT futures course to your dashboard. It's 100% free and it's taught by me. So if you want some more of this energy, go get you some. You can email me anytime, day or night, at Arabia@reallifetrading. I answer every single email I get. So if you have some questions, let me know. I also offer personal coaching year round, and I do group mentorship every 8 weeks. I'm currently in the middle of one right now. So the next enrollment on that is May 2002. Also, if you want to look at trading Apex, trading other people's money, I can get you 50% off of your Apex trading account. And that 50% off covers the evaluation fee, and it also covers resets, which, comes in handy. Everyone has to reset eventually when they're learning, right? When you're first starting out, don't think that you're not going to reset, because you are. All right. So does anyone have any questions? Oh, let me get my thing out here.
Hey, Arabia, thank you so much for this.
Absolutely.
It's incredible.
Absolutely.
I love your content. And I got to say thank you again to you, because you reignited my interest in futures. Because
oh, really?
The first time I looked into it, it was like the stuff I was looking at, the interfaces were clunky and things just looked very 80s. And I said this to you before, and then your approach to it just sort of like reinvigorated my interest around it, because I thought, oh, hang on a sec. I can do this. It's not like completely baffling me from the front end.
Right.
So you kind of unpacked it for me. So thank you so much for that.
Well, thank you very much.
There's so many things we could get into about futures. That's like a million questions I could ask personally.
Yeah, there is. There's a lot.
I know you had to condense it a lot, considering you had to kind of like go over the breadth of it in 30 minutes, right? And again, you did an amazing job of that.
Thank you.
I guess just going back to like one aspect of it is removing that feeling of intimidation about approaching the futures, which I think a lot of people have, and I certainly know I did. So to get past that, like when you're first sort of taking your foray into futures, like what's your recommendation? Because I guess one big thing to highlight is when you've got the likes of ES, where it's trading large point size, but you could be looking at something like MES, right, the micros, which is significantly smaller and more approachable and certainly less intimidating. So, like, what would your advice be around that?
Well, for the very beginner just coming into the world of futures, I actually have 2 pieces of advice. One, only look at ES. Only focus on the S&P. I know it's tempting to jump in with the tech, because most of the people, once you've been trading futures for a while, people tend to jump ship from ES to NQ. And if you're in like a mentorship group type setting where you're getting like hands-on instruction all the time about how to trade NQ, NQ is like jumping into the Wild West first thing, you know, like you want something that has the range and the volatility, yes, but is not like zing, 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 because that can become really challenging to work through emotionally as you're also trying to learn how to trade it. So I would say go with ES. It's a little bit slower, but you're getting $50 a point. Like, come on, dude. No one's going to cry for you if you make a win on ES. And also check out the micros, because in it itself, although ES does trade more relaxed compared to the other futures instruments, it does still have mega range and volatility. So if you're finding that you're still having an issue with your stops, like you can't get your stop wide enough to not get wicked out and keep your risk under control, like if you have a smaller R, then definitely check out the micros. It's the same as every ticker with an M in front of it. So ES is MES, NQ is MNQ, and it just gives you, it's like 1/10 of the size of the futures. So instead of $12.50, it's $1.25 per tick. So, you know, a lot more manageable that way. Great question, Ben.
Yeah, I think it makes a huge difference, as you say, like the psychology and the emotion behind that. Certainly, I found that by going to the micros, and it also helps around your discipline, your risk management. You're getting into something where you're not like panicking, you know, like, no.
Yeah.
You can handle it. As you say, you can handle that size through the risk management.
Right.
No, that's fantastic. And like, the other thing to mention there about like ticker names is one of the things I found like a bit of an issue first starting out futures was that there is a difference in those names across, say, like the exchanges themselves, the brokers. So, you know, one of the things I found was like if you're using TradingView, what you would look at, say, with the micros on TradingView actually is a different terminology or nomenclature to what you would use in, say, Tastyworks, right?
Yep, 100%. So like, I think I just typoed that wrong, but I'm going to put it in the chat here. So if you're using, just real quick, we'll just use ES as an example. If you're using Thinkorswim, you have to put this / in it and then say ES, right? If you're using TradingView, it's ES1 exclamation point. If you're using Tradeovate, then it's ES and then the month code and the year. You know, so it is.
That's a little bit annoying.
Yeah, it is. It's annoying. There's no way to say it's not annoying. It's 100% annoying. My advice is to just go, if you can get a continuous contract, just use that. So continuous means ES1. That means that this thing is never going to change. It auto rolls to the next contract when it's time to do that. And you don't have to worry about remembering which month code you're supposed to be looking at and this and that. So if you're finding that whatever broker you're using, you can't figure out where ES is and you keep pulling up Estee Lauder, email me and I will get you the right one. I promise.
Thank you so much, Arabia. You have been awesome. I am going to take back some control of the presentation here. And again, for any future questions, get in touch with Arabia. We are going to take a small little break. We've got 5 minutes left before our next, or 6 minutes left before our next presenter. So get up, stretch your legs, and we will see you shortly. Hello, Dean.
Tracy, how are you?
Good.
It's been a long time since I see your face.
I know.
It's time to miss you then.
What did you think of Arabia's presentation? It was awesome.
Do you know what it is with Arabia? Every time I think she can't raise the bar, she does it. So it's crazy. You know, it's brilliant. How informative. And if anyone's out there, I would recommend just going to get a coaching session with her. It will save you money in the longer term anyway, so it's worth the investment. But
absolutely.
Phenomenal.
Yeah.
Phenomenal.
For sure. So what have we got in store for us next?
Oh, wow. Well, we got one of my personal favorite people in the RLT community, which I'm very fortunate to be a part of, head of RLT India. She is the most, how would I say, she doesn't really value herself enough, I don't think, in my personal opinion. She is this great day trader, and especially if you're looking to play bearish positions, like phenomenal day trader. And I think she's probably, Jeremy won't mind me saying he's a great trader himself, but I think Maloney is a lot better at shorting than him. So sorry, Jeremy, had to throw that out there. But yeah, so Maloney, queen of RLT India, and day trader extraordinaire. I run out of words to describe you, Melanie, so I hope that's okay. Don't leave me to talk, Tracy. I just took myself into oblivion.
No, you're doing great. You're doing great. So Maloney, feel free to take control of the presentation. I'm going to stop the timer. You got a minute before your presentation can start, so go right ahead.
Absolutely. Let me share my screen so I can pull up my trading view chart. Guys, thank you so much. That was such a sweet intro. Thank you. Well, for those of you that don't know me, I'm Maloney Kamdar. Let me just pull up the slideshow real quick. Give me 1 second. Sorry. I'm right there with you, Dean, when it comes to tech issues. I am the absolute worst. And I remember I had gotten so used to trading on Thinkorswim alone. And I had to learn TradingView for real life trading India because Thinkorswim did not have Indian tickers. And it was awful for the first 3 months. Everybody had to sit me down and say, okay, this is how we do this on TradingView. So please bear with me with my tech challenges. Well, those of you that don't know me, I am Maloney Kamdar. I've been trading for about 4 years, and I put that up there because I found Jeremy, luckily, very early on in my trading journey, and he has been my only mentor so far. Well, besides Tracy, Sochi, Dean, everybody else, Arabia was phenomenal with my future journey. So shout out to you, girlfriends. You guys have been awesome. So I've been trading for about 4 years, and just as Arabia said, I got stuck in this big, massive COVID crash and Trump tariff era. I don't know if you guys remember that or recall that, but so I would be in swing trades, and overnight something would happen, and I would wake up to getting stopped out. Sometimes it would gap down way below my stop, and I would just be, it was just a horrific experience to be trading around that era. So I decided that I was going to have to come up with a new strategy. And day trading seemed like the most logical thing to do. I am a full-time mom. I have 2 children, age 6 and 8. And so at that time, they were quite little and they needed a lot more attention. So I was constantly just, in this struggle of figuring out trading and learning all these new things and obsessing over the stock market and then not getting anywhere. I mean, trading is the only job, especially day trading, is the only job where you show up with your head held high, even though you've had a horrible previous day, and you turn a profitable day into a losing day. It is the only job where you lose money. So it's definitely terrible sometimes if you don't know what you're doing. So I had to go sit down and figure out just the whole trading aspect of things, day trading specifically. And so that's how I became a prominent day trader, where I like to trade the afternoon reversals a lot more sometimes than the morning time frame or towards the closing time frame. So I figured out this amazing time frame around noon and came up with a strategy that worked personally for me and my team really well. And so we just kind of stick to that for now. And I can't wait to show you guys that. So let's get started. I'm going to move to TradingView real quick. And I'm going to show you guys a trade that our team took today on our Slack channel. So AMD, what I like to do early in the morning, I rely very heavily on fibs. And what I like to do early in the morning is to come in and evaluate the situation. AMD clearly was the weaker ticker compared to the rest of the market. The rest of the market wasn't gapping down as much. AMD opened with a massive gap down. And so immediately my brain just goes towards bear trades. I think I'm one of the only traders with RLT that enjoys bear trades way more than bull trades. And it's because of my time frame. You know, afternoon reversals when kids are in school and everything's calm and composed at home. That's when we had a massive bull market. That's when the reversals mostly came in. And so that's what I capitalized on. So what I did in the morning time frame is looked at AMD, identified this as the weakest link, plus everybody that bought over here was definitely trapped and would look to exit their position if we opened with this gap down, which is exactly what happened. I love the fact that the green line on my chart, guys, is the 10 EMA. And I love the fact that we opened below the 10 EMA. So now, what do you do with this information now that you know that we're going to be bearish? I went ahead and put fibs on yesterday's candle. I rely very, very heavily on fibs only because I'm still, after all these years, I am still unsure of where the target should be. Stops, I'm very clear on, but target sometimes comes and gets me because I leave so much more on the table, as you can see in today's example. There's just so much more left on the table. So I put in fibs on my yesterday's candle right over here and identified the 1618 range. I'm gonna get rid of these fibs real quick, and so you guys can see the 1618 range is right over here, right where my entry was. So what this tells me, guys, is, so for those of you, can everybody type in a 1 if you guys aren't really familiar with fibs in general, or that you don't use that very much in your trading style? Okay, cool. I see a couple of 1s. Okay, all right, awesome. So what fibs tell me, guys, is that, so we know, we have to understand that the 618 range right over here is the golden ratio. Things could retest back up to the 618 level and then roll back down to the 1618 level. Fibs essentially are just ratios. So imagine 100 people bought AMD here yesterday. We're going to pretend like this was a green candle. Imagine 100 people bought AMD yesterday over here. Now, out of that, 23 people sold. The rest of the 70 are not really that shaken. Now, about 40 people sold. And still, the rest of them are not shaken. 50 sold. Now, 61 sold. And we're still not bouncing. Are the ones on the bottom gonna worry about it now? Absolutely. That's when, if we let go of the 618 level, that's when things can get very, very shaky. We're going to go back to Tesla real quick, and I'll show you exactly what I mean by the 618 level. If that goes, things can get very shaky. I'm sorry, guys, if you hear the rain in the background, it's because it's raining pretty heavily. We have a tornado warning here in Charlotte, North Carolina. So, anyway, so that's what fibs tell you, exactly how much selling has happened. This is just a general idea of what selling has happened. So 1618 level here is usually the bouncing range. If there is strength, bulls will identify this, and a lot of fib trading is done by algos. It's you know, and that's why it works so phenomenally well in futures. I trade futures a lot thanks to Arabia. I got introduced to futures a while ago, and futures till today are my biggest profitable trades. So the 1618 area usually happens to be the bouncing spot, and since we did not bounce over here, I went over to the 3-minute chart and had a very close eye on this guy right over here and said, okay, well, if we get some sort of rejection right over this area, I am confidently taking this trade short. So this candle came in with great value. This was a retesting candle, and then this kind of rejected it a little tiny bit. Not a very sure shot confirmation, but I love these tweezer tops on the top. So I set up my trade with this being in mind. This line got moved up a little tiny bit. I had an entry set up somewhere over here. And so anyway, so you get the point. I got filled over here, and I had gone ahead and put fibs on this guy, on this move right over here to determine. So now we can assume that the high and the low has come in, especially AMD was just kind of sideways in range bound. And so I went ahead and put fibs right over here. Sorry guys, the other way. Because I want to find out how low AMD can go. So went ahead and put fibs right around this area, and I wanted to take target at a new low. So this made the new low, and so I kind of just took all out. However, if you were patient, because I'm in quite a bit of day trades, I manage 3 or 4 tickers at a time. I didn't want to be in this trade too long, but if you wanted to hold on to this for a little bit long, I can undoubtedly tell you that AMD at some point today should and will go touch 109.86. So this could be a great area of target levels. Now, with this information, do you think that you would be a confident day trader? And this works phenomenally well on anything really. So I want to show you guys SPY. So let's go look at SPY real quick. And we are going to, it doesn't really have to be just with 15-minute charts or an hourly chart. It's really, it could work with any time frame that you pick, and it works phenomenally well for swing trades as well. So here's SPY, and what we're going to do is measure this drop right over here. We're going to measure this drop and determine how high things can go. So if you're trying to find out how high things can go, I want my 1618 range to be on the top. That's the easiest way to identify this and understand it. So we're going to measure this move down and determine how high things can go. All right. On this day, with this gap up above the 1618 level, everybody and their mom said, no, we are going to go bearish because this is a massive gap up, except for me and Team RLT India that sort of follows along. We thought that there is no way that we can go bearish, especially when we open with a gap up above all of this resistance and the 1618 level off this retracement, off this move down. So we handpicked some extremely good bullish trades. Apple was one of them, and I believe Tesla was the other one. But anyway, so we made quite a bit of ours on this day, and really it worked out phenomenally well. Now my telltale sign was literally just the fact that we gapped up above the 1618 level. That's it. That's how easy this can get. Is everybody following along? Does anybody have any questions? I see Dave Patel. Hey, I see. So Dave Patel has been a very, I guess, he's been attending all of our YouTube lives. I trade on YouTube, on my YouTube channel, live every Wednesday from 9 to 11. So if you guys are interested in day trading and getting some day trades in, feel free to check out our YouTube channel and go ahead and like and subscribe so you get notifications when I go live. It happens Wednesdays from 9 to 11 on EST. Eastern Standard Time. So anyway, so this was one of the trades that we took. Currently, my team and I are looking at a day trade in Tesla. So Tesla has had this massive move up, and we cannot deny that. Although there were not very many telltale signs on where Tesla should be at open, I kind of had I had a bearish bias to it. For those of you that know me, I like bear trades a lot more. So I had a bearish bias to it. And I went ahead and put fibs. Tesla usually works out really, really well with fibs. So I went ahead and assumed that this was the given low of the day and the given high of the day. And things usually on Tesla tend to reverse around 11 and all the way down to 1 p.m. So I picked this guy, found this inside candle on the 3-minute chart right below the 236 range. And we entered our short right over here, which I'm currently in, just about to exit right over here. This is my target at the 618 level. Now, if Tesla fails to bounce here at the 618 level, guys, that is a very powerful telling sign. That means we could have a deeper pullback. But because this is meant to be a day trade and I don't want to be in a day trade for too long, I'm going to take all at my target at my 618 level. And I should have been out. We should have been out on this guy. So simple as that. Just put fibs on today's candle, and we just want to determine how far things can pull back for a reversal or a continuation. Doesn't matter. Our job is to get in the trade, be profitable, and get out. Take your profits and get out. And that's all there is to this strategy. Aside from that, I rely very heavily on inside candles. So as you can see, Tesla on the daily chart had a beautiful inside candle yesterday. This is an indecision candle, which just with a little bit of a buying bias, but this tells me that there is weakness. For those of you that don't understand inside candles or don't really know why they work so well, it literally, if the simplest way, this stuff makes sense to me in my head, which is another thing, guys, why I love Jeremy so much, is because he just explains it so simply. It's all so simple for him. As a brand new newbie out there on the market, I found it really hard to watch some of the other, I don't want to be naming names, but to watch some of the other guys out there just yelling at you and just like, how do you not know that? I don't know if you guys ever follow along on CNBC. I listen to them for entertainment purposes sometimes, and so if you follow along on CNBC, there's just men out there just intimidating you and making you feel like you don't know anything. And I hate that feeling. So I try to simplify it in the best way possible. And so the inside candles, the way I imagine in my head is, imagine a horse is running a race and you're betting on that horse and you're saying, okay, cool. Now the horse is around 5 miles, okay, and you're like, okay, come on, go higher, and the horse is saying, wait, I need a breather, I need a break, I can't do this, I can't just keep on running. That's what inside candles are, guys. It's literally, that's what it is. It is as simple as that. The horse can't keep running. Now, after 5 miles and a break, the horse can decide whether it has more energy and it can go higher, like the daily candle on Tesla, or it can decide if it's just way too tired, if it's not going to be the winning horse. That's it. That's the way I look at it. Now, I don't know if you guys are following along with this candle, but this bounce is just so very predicted at the 618 level. Now, how would I play this bounce? Would I have an entry right over here? Not really. No, I wouldn't really have an entry right over here because the trend is primarily bearish. I want to see some other signals come in. I want to see maybe a trend line break, or I want to see some other validation come in before I blindly just place a trade over here. So for that reason, I wouldn't have really placed an entry over here, but we would have definitely been out of our day trade bearish. I see some comments in there. Does anybody have any questions so far on fibs or inside candles or anything specific? Feel free to type it in and I will get to it. So that's the way I like to trade inside candles. Besides that, 15-minute inside candles, guys, are the most powerful things out there, especially if the 15-minute inside candle is bullish. If you're trying to take a trade bearish and this candle came in, sure shot. This is a definite guaranteed day trade bearish, even though the rest of the market could be screaming bullish. Tesla does not care. Another fun fact, guys, I do not like to trade very many tickers. Due to RLT India, I've had to focus on more tickers, more requested tickers, more popular tickers that other people may like to trade, and I'm trying to analyze them for my team. However, for my personal trades, I prefer to stick to specific tickers, like Tesla and SPY are the only two tickers that I like to trade. And then comes the futures, which is ES. Unlike Arabia, I am highly, highly scared of trading the Qs because the range is just so vast, and sometimes you can get waked in and out. ES tends to be a better player in my opinion, a safer player. If you're a much more advanced trader and you like NQ, there's no harm in that. But I stick to ES and GC and play futures that way. But besides all of that, I also have a very prominent rule that I figured out very early on in my trading career, which made me a little bit, Rob says you shouldn't be scared. I'm an idiot. And I'm yelling. Well, you know what? Sometimes it's scary. Sometimes it's scary to place your entry right over here and then hope that it goes bullish. So it's especially when we've had that many days in a row and still leading to an indecision candle right over here. So that's why I'm a little bit scared, but let's move on. So I found out very early on, thanks to Jeremy and a couple of other mentors of mine, that I needed to make money. I needed to see rewards. I needed a rewarding experience, not just, oh, I took this day trade and I am content with it. So I set up a daily goal, a weekly goal, a monthly goal, and an annual goal. And once I get to my goal every single day, I'm out. I'm done trading. And the rest of those trades, the other trades, once I've met my daily goal, are definitely done paper trading. I do not mess with the market once I've met my goal. Fortunately, my husband and I have, trading isn't my only source of income. So fortunately, that works out for me. However, I mean, for a long time, that's why I didn't have a trading goal, a weekly goal or a monthly goal in place. But now that I have that, I know exactly what I need to do. I know exactly what trades I need to take. I know what trades I need to stand out of and not be in stupid trades all the time. How often has this happened, guys, where you take a trade and you win, and then you take 4 others and you win, and then you take a 5th one and you're literally thinking, well, I'll just get more of this from the same well that the others came from. And then you end up giving it all back to the market. For that reason, that's how I would play my day trades out all day long. And it was just horrific. So now that we have this in place, I've stuck by my rules for quite a bit of time, and it's been working out phenomenally well. I like to stick to smaller accounts rather than having one large account. So I have a couple of small accounts that I love day trading in. That gives me 2 things, guys. So it assures that I'm not over day trading. I'm not over trading, and I'm not taking very many day trades because I can only take 3, and I like to leave them below the PD2 rule restrictions. So that ensures that I don't overtrade all day long, and it gives me, they're just large enough so I can trade futures. So it gives me the flexibility of trading both ways. And I get a rush out of growing small accounts into large ones and then starting all over again. I understand I'm quite different than the rest of the traders, but these things have worked out so well for me in the past that I refuse to stray away from it. So that is what my strategy consists of. Are there any questions? Irfana says, what indicators are your must-haves for intraday trading, please? Absolutely. Okay, so Irfana, let me tell you. I stick to the 10 EMA. I love that so much. RSI is another one that I look at oftentimes. So for example, if you look at the hourly RSI on Tesla, it is high. I mean, it's kind of gradually coming back, but if you were to look at a few days ago, right over here, maybe even, it's high, it's up there, and it's due for a pullback. So RSI is definitely something that I look at, which is why I'm confident taking bear trades. This target line is from another trade, sorry guys. Which is why I'm comfortable taking bear trades. So it just confirms my bias. 10 EMA, RSI, and sometimes I will look at the volume profile and kind of determine where targets and entries should go, but not very often, not all the times. I know Tracy relies on this heavily, and she is phenomenal with that. But I simply just rely on fibs, RSI, the volume, and the 10 EMA. I like to find trades, especially if I'm going bearish. The 15-minute 10 EMA tends to be super, super helpful. It tends to be either a great level of support or a great level of resistance. It just tends to bounce off of this level all the times. If we're taking bullish trades, this is something I want to look at. If we're taking a bear trade and we're kind of hovering above the 10 EMA on the 15-minute, I want to give it a break. I want to make sure I assess the situation beforehand, and then take that trade. The 10 EMA on Tesla works like magic on the 15-minute chart. AMD is another candidate that works so well with the 15-minute 10 EMA. So those are the things that I rely heavily on. Besides that, other indicators, the way I look at it is that you're trying to bake a cake, and you have all of these ingredients that you're working with, but then eventually, sure, you'll bake a cake with different ingredients one time, and then you'll do something completely different the next time, and then something completely different the very next time after that. But once you've found all of your ingredients to make that perfect chocolate cake, you are not going to soy away. And that's what trading is to me. That's how I look at it. So I look at all my ingredients as all my indicators as the perfect ingredients for my perfect chocolate cake. And fibs, RSI, and the volume profile has been working out really, really well, and the 10 EMA as well. So it's been working out really, really well. And I tend to, I'm fiercely loyal. So I tend to stick to the tried and tested methods a lot more than venturing out. Which is why sometimes a lot of people who ask me this question, why do you think women traders are better traders? Which we undoubtedly are, by the way. We are. No one can deny that. But it's because we're so loyal. I think we just tend to stick to the things that work and tried and tested methods. That's ideally it. I see another question. Do you take into account moving averages with this strategy? Yes, Daniel, absolutely, 100%. So on the 15-minute chart, absolutely, I tend to take in all of the other moving averages. However, so because they're day trades, I don't really look at, the 200. So for example, AMD today was on the daily chart. So let's go to the daily chart real quick, and I think it was somewhere out there with the 200. Oh yeah, we opened below the 200, or I think came close to the 200. I'm not sure which. This is how much I don't look at these things. So that tells you a lot. But so I believe this is the 50 SMA on the daily, and 100 and 200. But yeah, no, I do not tend to look at that, especially if I have an established, trend. AMD was the perfect one, which I'm kind of kicking myself in the head right now. Like I could have just stuck to the 1618 range, and it would have gotten very close to our target, and had more on the table. But no, so to answer your question, the larger timeframes, I think because we're day trading, do not tend to matter as much, especially when something has a bias. So for example, this was another trade that we took yesterday on AAL that did not work, and I'm not sure if there were any moving averages along the way, but this was hold on just 1 second. We planned this trade out and it did not work. This was a beautiful gap and go if this had, worked out really well for us. And it did not work out really well for us. So I'm sure there were some moving averages along the way in here. And if not, then yeah. But no, to answer your question, I tend to not look at it as much for day trade specifically. AAL yesterday was also a perfect candidate for a gap down a little bit, and it opened actually at a fairly good range yesterday, and it just did not. It was a gap and go that just did not go. I thought some profit taking should occur with a pullback, and just did not. So we're just going to leave it alone at that. Another fun thing that I like to look at a lot is for swing trades. I tend to rely on fibs quite a bit. So now that Shopify, everybody has their eyes on Shopify. So for Shopify, now that we're here in this situation, what I want to do is measure out this move up on Shopify and determine, there's a reason, guys, this is bouncing off of the 382. So if it pulls back down to the 50% level or the 618, that is extremely, extremely viable range on Shop. It's basing, I know the trend primarily is bearish, and so it would kind of be counter trend trading, but if you're looking for entries on swing trades, I would buy maybe 20% of my entry right over here, and then the rest maybe at the 618 level, or just kind of assess and see what it's doing around the 618 level. This has worked out fairly well for us on Square. We took a trade on Square. This was a swing trade that my team and I set up on Square, which we got triggered in on. This is a bearish day trade. I'm sorry about that. This was a bearish day trade we set up, but we got triggered in, I believe, on this day for a swing trade, and then we got to our target within the very next day, just using fibs, which is just, it's perfect for quick swing trades in and out. That's another thing I love so much. I do not like to sit in swing trades for a very long time. I tend to, I guess, micromanage my swing trades. So I like to stick to swing trades that are shorter than a week's range. And it gives me the peace of mind that I need to, that I'm in and out quickly. I don't need to babysit this trade for a lot longer. And I don't know if you guys, I don't know if you guys like those longer term swing trades. I know Dean primarily is a very, head on swing trader, and he will hold on forever. But I can't do that. These trades with your team, you say, where do you post them, please? Irfana, so I post these trades on our Slack channel. Real Life Trading India has their very own Slack channel. So if you go to reallifetrading.in, I'm going to type it in, www.reallifetrading.in. There we go. And you can find me there. You can subscribe to our Slack channel, and you will have access to our wonderful community and access to all of these trades that we set up on a daily basis. I trade a whole bunch of futures trades in there, and I take a bunch of day trades in there, and I post every trade I take in there. And if some trades need managing, then I'll go in and move stops and things accordingly on those trades. This was a trade we did not end up waiting for the target. We actually took all somewhere around here. I think I want to say somewhere around here, because it was taking too long and it was just sideways consolidation. We did not want to get sort of stopped out and then it come down on us. So this was just a trade that we did not make our one full R on, but I have these lines from the morning that I did set up on. Does anybody have any other questions?
Hey, Maloney, thanks so much for this great presentation. We have a question here from Etra, who just wanted you to go back over the use of the Fibonacci levels once more.
Yeah, absolutely. Okay, so Etra, I'm going to ask you to pick your favorite ticker just pick anything that you love looking at, that you're looking for, or awaiting any sort of move on. And I will do it on that. I'll give it a minute until they respond and take it from there.
Yeah, I went ahead and asked him to add in the ticker into the chat there. I actually had a question, if you could just talk a little bit about while we wait for that. For some people, bearish trading is really tough. They might have that bias to an upward market, or even though the rules and the approaches can be the same, you could turn the chart upside down to help yourself. What advice would you have for someone that struggles to be able to trade bearishly?
Oh my goodness. Okay, so bear trades, ideally, Josh, we are looking for this, and then we're looking for that S curve, right? That would be an ideal situation for any bull trader, for that matter. Where I come into play is I am banking on this S curve, and more than likely, this S curve respects all the fib levels. That's why fibs work so well in my situation, where I am literally just banking on that S curve down and then go higher. I don't care. It doesn't matter what it does to me after. But as long as it comes down, and everything has to pull back. Things can't go on forever. Unlike the SPY in the past 3 weeks, it looks like we've had 600 days of bullish momentum. But it cannot be sustained. At some point, some profit taking has to happen. And that's how I tend to confidently trade bearish. It's not like I don't take bull trades at all. I do take bull trades quite a bit, actually. This was a bull trade we set up very early on in the morning and got to our target really quickly in the morning. So here was a bull trade that we set up right over here and got to our target within a couple of minutes. Why is my stop down here, if you may ask, is because of this candle. This guy right over here, I've been eyeing this range and the 1618 level. So I'm going to take the stop off, and so you guys can see it bounced exactly off of the 1618 level off this candle. So I know it seems complicated at first, but fibs, literally. And why this, you may ask? Why this candle and not this one? Well, because NVIDIA today, and I want to show you something fun. So we're going to look at the daily chart on NVIDIA, and we're going to go to January. Give me 1 second. I'm going to move some tabs around so I can see my screen better. We're going to go to January 13th. Okay, January 13th, NVIDIA was at this level. And as you guys know, NVIDIA and AMD tend to trade side by side, hand in hand. So this is NVIDIA's level, where we're kind of above that level. So I have a very bullish stance on it. I know not to trade NVIDIA bearish. However, now let's go look at AMD and January 13th level. Look at that. Drastic difference. This is weakness in any chart. I know not to trade against the trend, especially during bearish moves. I mean, when we have that bull move up and we're pulling back, I still want to see some other weakness. I don't want to just rely on that pullback, because what can happen sometimes is, let's say we're doing this bull move up and then we pull back down just to the 236 level and then we bounce because it's so strong. So I know not to trade bearish on NVIDIA because of this reason. I don't think that NVIDIA would pull back to the 618 level to retrace. And so the daily chart just kind of helps me determine what the trend is, whether there's weakness, whether, so Microsoft and Intel tend to trade side by side, and I like to compare them as well. Tesla is just not comparable with anything. If you wanted to, you could do it with the QQQs, but Tesla is its own beast, and so I don't really have a comparison there. But I mean, if you were doing the cruise lines or if you were doing the airlines, you can clearly pinpoint the ones that are extremely strong versus the ones that are kind of on a struggle bus a little tiny bit. And so this is how I know to short AMD and to go long on NVIDIA. Now, to go back to Etcher's question on, and we're going to do it on NVIDIA because we already had a trade on it. We don't have to rely on that. We will just simply, I'll just go ahead and explain what the fibs are in the simplest form possible. And this is how, so if anyone's interested in trading with me, we do a Wednesday YouTube Live, which is absolutely free. You can come join me. But what I specialize in is simplifying these things so much, down to the point where, so a lot of people will say, well, why do gap ups and gap downs come into play? Why do they have an effect? Why do they tend to behave one way or the other? So the way it makes sense to me in my head with gap ups and downs is, imagine you're standing here in this range right over here. This is your ceiling and this is your floor, and you're dribbling a basketball, and you put it down here to this level. It will undoubtedly bounce. Right from your floor, it will bounce. Doesn't have to go all the way up to the ceiling, depending on how hard you're bouncing it. It could go anywhere. However, what if you threw it up to your ceiling, and it's the ceiling is going to come into some sort of resistance? Absolutely, 100% it will. And so that's the way I tend to look at my gaps. That's the way it makes sense to me. Just the most simplified version of it makes sense to me, and that's the way I trade it. So now what happens if the gap fills? So let's say you threw it so hard up to your ceiling that you broke the ceiling, and then it went up to your roof. The roof acted as resistance. You will come back down to your ceiling, and then maybe look for a bounce. Maybe you climbed up the roof then and bounced it from there. But it will. When the gaps fill, they oftentimes tend to come back down and go higher. That's why I have a line, an alert right over here. If AMD, for whatever reason, comes down here, I would want to assess that situation and see if I want to set up a bull trade. Currently, it's doing fairly well. The 10 EMA is right around that range. And if NVIDIA comes down to this level, I will most likely, when this alert goes off, I will most likely assess and see if we can take a bull trade on it. Okay, so fibs on this guy. So what I'm going to do is have a bullish bias on NVIDIA in general and put fibs on this candle's high and low. Okay, so we're just going to do this. High and low. And because we want to figure out how high it can typically go, our 618 level is up here. If we wanted to figure out how low it can go, you would have to flip it around, and the 618 would be on the bottom. A lot of people find it really hard to place fibs, and they don't understand which way it's supposed to go, but it's really not that complicated. You just want to figure out which way the 618 is supposed to go and then play it accordingly. So now that we have that in place, we will go look at the 3-minute chart and see if NVIDIA has pulled down to the 236 range. Just the way 618 acts as resistance or support level, 236 range also acts as support or resistance level. Because we're trying to find out how high it can go, 618 tends to be a little bit higher. So if I did not take that trade on NVIDIA, if I saw this rejection come off of the 618 level, there was no way for me to tell if it was going to go retest the 618 or not. So I could not lie to you and be like, yeah, I would have a short entry right over here, and I got filled and I took my target. No, I can't do that. But now that I know that the 618 failed to hold, what I'm going to do is put an entry right over here, right below these green candles, and look to short it. And where do you take your target? 2 fib levels down. So this is considered fib level 1. This is considered fib level 2, and your stop could go somewhere up here on the 786. This is the 786. I'm sorry about that, guys. This is a 786. So your stop could go somewhere over here. And that trade would have worked out in about 9 minutes. So that's just the way I like to trade. I like to have very quick targets. Now, does that mean, oh, we're not going to go any lower? No, absolutely not. But think of it like you're riding the taxi. And I stole this from a really good friend of mine, Robert Falco. Think of it like you're riding a taxi, And once you've reached your destination, should it matter to you where the cab is going afterwards? No, it should not. Ideally, I would want to walk away from this and never look back at it. But because it's me and I obsess over things, I come back and look at it all the time. But I don't take those trades again then. However, so now we know that this 236 range is being deflected a little bit. We're kind of sort of bouncing off of it. So if we're bouncing off of it and we take out this 50% range too, I would 100% set up a bullish trade up here and then look for an exit right over here, 2 levels higher. That's it. Simple as that. Could happen. You could get stopped out. There are multiple scenarios, but that's where you manage your risk. So fibs work, just, everything works, not all the times, of course.
That is so true, Maloney. So true. You did an awesome job. Thank you so much for your presentation. And once again, anyone that wants to connect with Maloney will find all of her links in the descriptions. And we are going to take another quick little break. I'm going to pull this back. Let me just share my screen.
Thank you, guys. Thank you.
Take a quick break, stretch your legs, and we will be back for the next presenter very quickly. Welcome back, Dean.
How are you, Tracy? How did you find that?
It's good. It's good. Let's type a 3 in the chat, you guys, if you're enjoying your time so far. We've had 2 presenters. We have 3 remaining. Yeah, a lot of 3s. Good stuff.
Amazing. I always feel like Maloney would make a really good supervillain because she's so sweet and unassuming that she would be phenomenal if she turned out to be the bad guy. I think that'd be brilliant. Maloney, that's your next job, I think, definitely for me.
Oh, that's hilarious. That's hilarious.
Brilliant.
So who do we have coming up, Dean?
We have someone who I'm actually really excited to see their presentation, Federica D'Ambrosio, who is the CFO of our partner company, Audacity. So she's managed to combine 3 things that I'm really passionate about. One, anything finance related, being that's my background. I love Italian people. I have to say that because my wife's Italian. And also Forex, because I trade it every morning. London breakout strategy every single day. So really excited for this presentation.
That's awesome. So, throw a 2 in the chat to welcome Federica.
Thank you. Thank you very much. I didn't know your wife was Italian. That's good to know. Okay, so first of all, I just wanted to thank you guys. Thank you to Josh and the entire crew of the Real Life Trading for having me, for inviting me actually to this webinar. It's something that I really, I really appreciate because I feel like, it's really, really important, the presence of women in this still male-dominated world. So today I'm not going to share my trading screen, so I'm not going to share my personal experience, but I'm going to tell you about the stories of 3 of our ladies, 3 of our traders. Different stories, different approach to the market, but I think it's something that is worthy to be shared. So I'm going to stop the video and share my screen with you. Yeah. All right. Okay. Perfect. Let me just put this one up. Okay. So just a bit of context. First of all, I've been a trader for Audacity Capital. I've been trading with Audacity Capital for the past 4 years now, actually something more than 4 years. And throughout the years, then I started to, to work my way through the business as well. Audacity Capital is a prop trading firm. We have been around for quite a while now, for the past 10 years. And the main idea, the main aim of Audacity Capital is to provide valuable traders, provide talented traders with the capital that they need to be profitable in the market, to succeed in the market. We all know that the way through the profitability is a long journey, and it doesn't really come easy. But in a way, we are trying to support with our business. So, how do we do that? Through the funded trader program. The funded trader program exactly has been launched 10 years ago. Again, we're looking for experienced traders. Once the trader get accepted into our program, we provide them with the capital. They start trading with a real money account of $15,000. This is because we don't really believe in demo accounts or in challenges, at least not for those that do have the experience in the market. So our trader starts with $15,000, and the job is really easy. They need to make 10%. As soon as they make the 10% in profit, we then share the profits with them 50-50, and we double the account size for them. So this is where we intervene in the lack of capital. How women gets into all of that, because in the financial industry we have seen a rise of women in finance in general, and also female traders. Although this is true in particular in big institutions, in my opinion, in investment firms and in big banks. Although it's really clear and straightforward that nowadays finance is shifting more and more towards a retail world. And I have to say that here the percentage of women trading is still pretty low. As I was saying, we have traders from all over the world. We have thousands of traders all over the world. Most of them are really, really profitable, especially this month has been a very good month for them. But the percentage of women we realize is really low. And we're looking to change that, especially me as a woman. I would love to change that. Because, exactly, I just wanted to quote Christine Lagarde here, because there have been studies where it is demonstrated that women tend to outperform male traders in the long run because of different things. They are more risk adverse, and they don't move positions as quickly, as erratically as men. Now, this is also true that perhaps in the short term they are less profitable, but if we are considering profitability on the long run, then 100% we can see how women tend to outperform men. This is because psychologists and market analysts have recently noted how they tend to outperform men in the long run, due to a series of factors that are related to the some differences that are innate, psychological differences. So, for example, overtrading. Overtrading is due to an overconfidence factor that is clear, especially from a male perspective. I just want to give you a little example here. This is personal. My colleague Matthew, for example, he just shared this thought with me a few weeks ago. To be completely honest with you, it's something that happened, I think, a year or maybe something more than 1 year ago. There was a news on euro. I think it was an interest rate or something. I was trading on my personal account, and I took a trade on that news, and it went in. But luckily for me, it went in my direction. It was like 1:30 p.m. here in UK, and as soon as I closed my trade, I packed everything, I took my bag, and I went home. A few weeks ago, I was just talking with him about different other things, and he was like, I never understood why you decided to just stop everything and just go home. And I was like, because I made my profit for the day. Trading for me is a job, and I treat it and I respect it as such. I have a daily target. If I reach it, that's it. I'm going home because I'm done for the day. This is something that Milone was also saying earlier I was listening to. We are more systematic in a way in our approach. So, we do our thing, we reach our profit, and the fact that we have less tendency to overtrade, this lead to, better performances in the long run, of course. One more thing, we are quicker in cutting the position, cutting the losses short. This is perhaps because we are faster in admitting mistakes, and this is a point that I will never stress enough. This is something that I always tell to all of our traders when I get the chance to discuss with them their account. You always need to learn to cut short your losing positions, because if you cut a position short today, it's better than perhaps finding yourself a few days after or a week later with a margin call or with your account that is reduced by more than 20%. It's not something that it's not a situation you want to find yourself in. Pressure. It looks like women can handle better the pressure, can stay cool under pressure. What I'm talking about here, what I'm referring to is, for example, during news or during particular volatility in the market. Again, since we are perhaps more systematic in our approach, we have a stop loss, we have a take profit according to our trading plan, according to our strategy. Even if there is this volatility in the market that for a moment, or maybe for more than a moment, is going against us, we tend to be more confident in the analysis we have previously done, and we keep things as they are. We don't move the stop loss, just to put it in simple word. And again, we are more risk adverse.
Federica, I apologize for interrupting
sure.
you. We're just not seeing your slides advance. If you could click the From Beginning tab or the Presentation button, I think that might fix it. We're just seeing slide 1 right now.
Oh, okay. 1 second.
So sorry to interrupt your flow. Yes, yeah.
What can you see?
Yeah,
okay.
Now we're seeing the slide you're talking about. And then if you click the little button on the bottom right, it'll go full screen for you.
Yeah, 1 second. I'm sorry about that. I'm really bad with technology.
No problem. I wanted to let you know before you kept going. Yeah,
slideshow. Can you see this one now?
See. Yep,
if you can't, then
we're seeing the correct slide here, but it's not in the full screen mode. But we are seeing the correct slides.
That's weird, because for me it is in full screen.
Oh, okay. Well, yeah, I wouldn't worry about it too much. We can see your correct slide now that you're talking about. That's the most important part, I think.
Yeah, okay, that's fine. Anyways, I don't want to waste too much of your time talking about psychology and risk. I'm sure everyone here knows already a lot about that. And I just want to share with you some stories, as I was saying. The first story is about Rita. There is an interview in our website, in our YouTube channel, so you can watch the entire thing there. But the story of Rita is really particular. She's lady in her 50s. She has always worked in business, and at the point of her life, she was just starting to realize that the job market was changing. She's coming from Italy, and she was realizing that she needed to do something. She needed to do something about that. This is how she approached the trading world. She's self-taught. She learned everything by herself on YouTube, books, free webinars, things like that. She joined our company last year, and she hit her first target, roughly 1 year after. So it took her a while to reach her target. I want to show you here. You can see her equity line, the profit. You can see how she was slowly going up, and then take one wrong trade that was taking her back to the start. And then again, slowly going up, and then again going down. If you have a look here in November, she actually did hit target. She was up 10%. But I think at that moment in time, she had another trade open that basically just dragged her back to the starting balance. Finally, she managed to reach the target. But again, this is the importance of cutting the losing position short.
Federica,
yeah?
can you just do me a favor and click on the presentation mode down in the bottom right-hand corner? People aren't seeing your slides advance. So yeah, right there, click on that. And then my apologies for interrupting.
You cannot see it.
No, it's not. We're not seeing you.
No. I mean, you can see the slide now. Can you see the slide now? No.
We're on story number 1, Rita.
Okay, so that's where we are. If I go, if I move forward, can you see the slide change?
Nope.
No?
Nope.
All right, then I think there's something wrong. What if we just keep the slide like that?
Yeah, if you click on the slide, so right now 6 is highlighted, so that's the one they're going to see. If you click on 7, then they'll see that one.
Yeah?
Yep.
Okay. All right. I'm still on 6, okay?
Perfect, thank you.
All right, so just to go back to Rita, I'm sure you can see now her equity line, the profit, and you can see how what I was saying before, like you can see her profit like going slowly up, and then one wrong trade, dragging her down again, and then finally she managed to reach the target. Although Rita, she has a profitability rate of 92%, which is good. It's a great profitability rate, but because she wasn't able to cut her losing position short, and you can see that from the diagram here, from the dispersion diagram here, she was dragged by her losses over and over again to the same point. Another story, you can have a look at Rita's full interview on our channel. Another story, she didn't want us to share her name, but this other trader, she was pretty good actually. She reached target in less than a couple of weeks. I have to say that nowadays the market is giving a lot of opportunities to our traders. March has been one of the busiest month for us from that point of view. We're really happy. We're really happy with that. So this trader reached their target in less than a couple of weeks. A 63% of profitability, a profitability rate of 63%, which is quite good. It's acceptable, and we can see from the duration of her trades that she's mixing actually. Again, she has both long and short position that we're taking for maybe perhaps too long. But again, we're in front of a swing trader, so this is usually something that can happen. The most interesting story that I want to share with you today is this one. Again, she also didn't want to share her name, but I can tell you that she's a mom. She's a very good trader. She's been trading for a few years now. So she's relatively new in the business. She had a completely different occupation before. But again, she wanted to, make herself useful for the family and for her family. And she found her way to do that in trading. She managed to reach her 10% target in just not even a few months, just 1 month. And have a look at her equity line. This is something that is, in my opinion, really good, really amazing. It doesn't happen very frequently to see an equity line that is that nicely upward sloping. 97% profitability rate, only trading pound yen, and only one position in a loss, in pound yen, of course. That is something that is showing us she really knows what to look for. She really knows what is that her trading plan is, and what is the opportunity that is looking for in the market. only one negative position. This, I think, is one of the best trader that we have at the moment. If I have to be honest with you, from those stories, I think we can realize that to be a good trader, there are few things that you need. You need to use volatility. As a trader, you know that volatility is a multiplier. It can benefit you and it can destroy you. But a good trader knows how to operate with the volatility in the market. You need an opportunity. You need to know exactly what you are looking for from the market. And, you need to wait for the market, for the price to come to you and not the other way around, because otherwise you will end up, again, over trading and overexposing yourself. This is the example of the last trader we see. She knew exactly what her entry point was, and she was just waiting. Because we, of course, from one slide, you can't really see that, but we had some conversation with her, and she explained to us how she was perhaps not trading every day, but yet watching the market, waiting for the opportunity, and waiting for the price to come to her area of interest, and not the other way around. Liquidity. Of course, as a trader, you need to have access to a good liquidity in the market. We operate in Forex, in the Forex market. And because, we have, as I was saying, traders, we deal with traders from all over the world. And at any point in time during the day, regardless of the time zone, you can find liquidity in all the 28 pairs. So it's something that is, it gives more options. It gives a lot of opportunities to our traders. On top of that, we are lucky enough to not work with a broker, not a retail broker. We work with a liquidity provider. That translated for us and for our traders means a good access to the liquidity in the market. There are no commissions in placing trades and no swaps. And the spreads are really, really tight. This is something that a trader should always consider, because of course, maybe it's not something that is, it will be pointed out in a small account, the fact that there are no commissions, no swaps, tight spreads. But in terms of commissions, I believe it's really important to consider that when you start managing bigger accounts from, for example, from 6 figures above, this is something you want to have a look at. But of course, to be a good trader, and by good trader, I mean profitable trader. And again, let me say again that it's not an easy journey. It doesn't come easy. You need to have the experience. You need to have the experience. You need to give yourself time, and you need to treat trading as a proper job. No one becomes a doctor in over one night or over a couple of weeks. And again, for trading is exactly the same. The experience can be acquired, can be learned on the field. So by failing, fail it till you make it, something like that. Sorry, I'm not British, so my English is not amazing, but I'm sure you understand what I'm trying to say. But also surrounding yourself by the right people, learning from the right mentors. It can save you time. This is, for example, my personal experience. I knew I wanted to become a trader, and I knew that this is exactly what I want to do. I knew it wasn't something that would come easy, but I've been lucky enough to surround myself with the right people that they saved me time and they saved me money as well, because I wasn't trading with my personal account as soon as I started, so I never incurred in personal losses, if we want to put it like that. But one more thing, if you want to be a trader, is you need the capital. You can't trade with few $100s. It's just a waste of time, it's a waste of effort, and it's a waste of money. because in order to see the profits, in order to see the results of your work, you will have the tendency of over-risking a small account, which is why we have this program, because we do believe this program has been designed from traders to traders, and the lack of capital is one of the main things that traders should resolve in their way to profitability. And I think I'm done here. I finished my presentation. I'm sorry from the technical issue, and yet we did try before, but I'm not sure what happened. If you have questions, please do not hesitate. And if you want to get in touch with us, you can always do that. Okay?
Great job, Federica. Thank you so much. We did have a question earlier here from Carrie. She wanted to know if through Audacity Capital, there's the ability to trade futures.
No, not at the moment. We are mainly focused on the spot Forex market. We are considering different kind of assets, but as we speak, to begin with, traders with us only trade spot Forex.
Great. And could you tell me a little bit about, do you think that trading Forex is a good place for traders to start their journey on how to learn to be a disciplined and focused trader?
Yeah, I do believe they should start with Forex. It's much more easy to manage Forex market. It moves, but it doesn't move as indices or as commodities, for example. So for someone that is just starting, so I really recommend to start with the Forex market. I'm a trader as well, and I do like to trade different financial assets, different instruments. But I think it was fundamental for me to start small and to start with the Forex market. At the end of the day, if the analysis and if the strategy is based on technical analysis, a chart is a chart, unless you're trading options. So I think it's a good way to start the Forex market.
Great. Yeah, I tend to agree as well. You know, when we're trading, we don't need to make the job harder than it needs to be. And something that I think a lot of traders struggle with when they're starting out is a desire to trade very advanced areas of the market, more complicated instruments, multi-legged options plays, whatever it might be, because there's so much chatter out there, so much noise about the potential for these types of moves. But personally, I found that, you know, you have to build your base first, and something like establishing the right rules and discipline and plans by just trading one instrument like Forex, or just focusing on a few tickers like some of our other presenters talked about today, can really help get you that proper foundation.
Exactly. You need to get the basics right. As soon as you get the basic right, when I'm talking about basics, you need to find your strategy. There is not one strategy that works for each and every one. So you need to find your way. You need to find your way of money manage your account. And only after you can add up. You can't do that straight away. I'm not sure I have seen anyone successful doing that. I might be wrong, it might be my opinion, but from what I can see for the past 4 years, everyone started small and then added up. At least people that are profitable at home, people that we can call professional traders.
Great. Yeah. I think that really makes a ton of sense. You know, over time, those gaps in your education can show themselves if you don't have that foundation built up.
Let me tell you something.
Oh, sure. Go ahead.
Sorry. I'm coming from an academic background, but in the university, they never taught us how to trade, actually, how to trade. That's why I decided to take a course and to, do that everything like step by step. My mentor told me, and I will never stop repeating that because to me it was like life-changing. It was like, you need to consider the job of a trader as a pilot. The experience of a pilot is measured in the number of hours that you look at the screen that he has on flight. Just like the experience of a trader can be measured by the number of hours he just look at the market, analyze the chart, and all of that. You can't expect big profits. You can't expect experience to just happen like that. But this is the shift I was talking about. It's good. It's good that finance is more open to the retail world, because it's giving opportunity to loads of people that perhaps would have never jumped on this industry, and they have the talent. So it's good in a way, but it's creating a lot of noise as well. So that's why you need to stick with the right people. You need to, listen to good mentors, people that actually make a living out of trading. Not everyone can teach, I think.
I agree with you. And Federica, I love that analogy of a pilot. Because a new trader with a big account is like a pilot with a 747, a brand new pilot with a 747 loaded with a bunch of people on it, flying transcontinental to Japan, whatever. It's crazy.
It's crazy.
Yeah, for sure. Thank you so much. That's been great. We have any more questions for Federica?
Federica, I was wondering, you touched on a topic that I think everyone here is passionate about, which is the financial literacy and education. And you mentioned distinctly that, even in your university financial education, about the highest level that we could go, all of us out there to learn these types of things, they still didn't teach you how to trade. And, this is something that we talk about a lot at Real Life Trading is whether it be for women, men, or young adults or children too, there's not enough information out there about how to learn this skill set and how to practice and make this skill set your own and make it part of your income system and your cash flow system. I was wondering if you had any feelings or opinions about how more women could learn to trade, how more people in general could gain access to financial literacy.
Let me tell you something. This is tricky, because it's true that they don't teach trading in the university or things like that. But it's also true that now everyone feels like they can teach how to trade. So it's a bit tricky, because sometimes there is no access to informations, but sometimes there is too much access that leads to the wrong information. I think that trading can be life-changing for a lot of people. But again, it's the lack of capital that scares people. Because if you have savings, for example, if you are a mother, a woman, and or a young guy that just finished university, and you have savings in your bank account for, I think, £500, $500, would you put those money in a trading account or not? If you want to learn, you have to. So you will do that. But how fast will you burn that $500? Maybe not you particularly, but the vast majority of people that start trading with a small account, they need to lose few accounts before getting to the stage of being able to, hold the balance first and then being profitable. It's not something that happened overnight. It's not going to happen on first account. So the alternative is a demo account. But then a demo account can lead you to develop wrong habits, wrong attitude, because you don't learn the value of money, because you know that you're not trading with real money. So if you want to, just take a gamble, you will end up doing that, unless you're really strict. But even the most strict person that I know trading with a demo account will take a chance, because deep down he knows it's a demo account. He's not losing anything. I don't know if it makes sense in a way.
Yeah, absolutely. I'm a big believer that part of the education process eventually involves skin in the game. As a trader, we have so many areas that we have to refine, including trade management and emotional management and managing yourself. And I personally have found that, without having actual skin in the game, just paper trading or just using a demo account, you don't give yourself that real world experience to be able to actively manage your emotions in real time, because there is a difference between, the stress level that you might feel managing a trade with different levels of money on the line or money on the line versus no money on the line, period. And part of that learning process is you got to take that step so that you can become an expert in emotional management and managing yourself, and, then therefore managing the trade appropriately in a real-time, real-world scenario with actual money under the gun, live market hours, etc.
Exactly. Let me tell you one more thing, one more story. Is a man, is one of our traders. He is just, he's now managing $500,000. His journey was particular as well. It was hitting target after target. You know that we limit the lot size that our traders can use depending on the account size they are. So it was on the 15,000, went on 30, 60, 120. As soon as he got on $120,000 and he was able to trade with 4 lots, it went down straight away. I had a conversation with him and I was like, what happened? He was like, I wasn't used to see those kind of money. I got scared. Still, even if we give them the time to adjust, doubling the lot size that they can use together with the account size, just to, it's a way to guide them throughout the process, throughout the process of profitability. Even at that point, they can struggle because psychology is part of trading. Is the most important part of trading, more than the strategy, if you want.
I tend to agree. I see sometimes out there in social media, wherever it might be, some random posts by people saying, I have the best strategy and all you need is 90% my strategy and 10% emotional control and I can get you, to be a millionaire trader. But I would tend to think it's the other way around, that it's 10% strategy sometimes and 90% emotional control. Because once you have your trading plan and your strategy written down and you've practiced it and you memorized it, you're rarely going to deviate from it if you were to operate like a machine. But we're not a machine. We're living human beings that have to go through all kinds of external factors, variables, and events that happen to us all day long, every week. And you have to learn how to compartmentalize all that and not let it interrupt your work, that is trading, and not let it, allow you to make decisions that veer from your trading plan or your trading rules. And it's very difficult sometimes. It's a big skill that has to be practiced and learned to be able to routinely trade your plan without deviation because of your emotion.
Exactly. But you know what? I think if even big banks and hedge funds, if they use algos and they have everything automated and systematic, if even they take a part of their exposure to be managed from people, it means that the value of a person is still very much high in the market. The market is based on people's choices, on people's decisions of buying and selling. So, of course, we need to deal emotions with emotions.
Yeah, that's a really great thought, because, sometimes you even hear some discouraging comments from traders that, especially people who are maybe investors, not yet traders, or very green and beginner to the market. I often hear these sorts of negative thoughts like, everyone's using algorithms now. I can't compete. What's the point? I don't work for a big bank with an algorithm that's perfectly designed, et cetera, et cetera. But much like you just said, if these types of institutions are still paying attention to the individual trader, maybe there's something there that the algorithm can't fully capture, because this is a market of supply and demand put together by people and businesses run by people, and their emotions and their feelings and their thoughts about price come into and are represented in the candlesticks that we see on the chart.
Exactly. And the way you can react. Plus, that's the beautiful part of being a trader, I think, the fact that you can actually react to a movement, and you enjoy doing that. That's a trader. That's a trader that enjoys being a trader.
Yeah, absolutely. I totally agree. I think that that's the kind of thing that keeps people motivated, right? Maloney talked about having, I forget the exact phrase she used, but basically she was describing getting a good win, like getting yourself motivated by putting together the strategy, learning it, practicing it, but then actually going out there and getting a good win and feeling that confidence and that motivation. You know, that's a part of it too, because a lot of people are skeptical for all the reasons that we discussed today, until they start doing it themselves and they start actually learning the material, practicing the plan, and executing it, and seeing that, you know, also, as was mentioned today, when there's other people just like them who are doing it successfully from all walks of life and all different backgrounds and opportunities, it really helps build that confidence that, you know, much like riding a bicycle, anyone can learn to trade.
You know, that's why I love sharing stories of our traders, stories of success, because eventually when I get to share them, they do reach the target. But you know, it's not easy, and I don't want to picture it like it's the easiest thing to do. And maybe I'm going against my own interest, but there's no point. It's not easy. It's a job, and like each and every other job, it needs to be treated like one. There are good days, there are bad days. Simple as that. Accept that.
Absolutely. Yeah. I really liked what you said earlier about relating it to being a doctor. You know, you don't just become it overnight. A lot of people want to just start trading options as the first thing tomorrow because that's what they see on Twitter. And they hope that they're going to get that one big score next week and, you know, become an overnight get rich millionaire. But that's not how it works. And it's a slow and steady pace. And much like with any professional career, like you said, you got to put in the time. You know, if you want to be a doctor, an engineer, a lawyer, a CFO of a trading company, we put in years and years and years of education and practice and experience, and, you know, and
early
working
mornings.
our way up. And exactly. And hours lost from sleep.
Exactly.
Yeah, a trader treats it like a business. A gambler treats it like a get rich quick.
Exactly. But unfortunately, nowadays, too many gamblers call themselves traders. Let's put it like that.
Yeah, agree completely. Thank you so much, Federica.
Thank you very much.
Been wonderful.
My
you are
pleasure
amazing.
Being there. Thank you.
A round of applause, everybody, with a 7 in the chat for Federica. Excellent. All right, guys, take a 10-minute break. Stretch your legs. We'll be back with our next presenter. How's it going, everyone? Dean.
Go on. I was going to ask you a question, but you can ask me first.
You go ahead.
So, in these 10-minute breaks, what do you do? What does everyone do in these 10 minutes break?
That's hilarious. I ate breakfast. I did the dishes. I went to the bathroom. I went and told my son he had time to take the dog for a walk. How about you?
I love that. Well, embarrassing enough, I've got like a golf club here, so I just practice my golf swing during these webinars because I think I can't sit still for very long. So I have to do something in that. And just to show my level of dedication, my meal tonight, because it's evening time for me, is a protein shake because I haven't got time to stop. So yeah, I just went to make that and had a couple of coffees, looked at my A&D trades, and yeah, there you go.
That's hilarious. Yeah, no, it's very productive 10 minutes. Let's just put it that way.
I wonder what everyone else does. Let me know what you do in your 10-minute breaks.
Yeah, really let's hear it. I'd love to know. What were you doing in Arabia? Let me know. Would love to hear it. So what's your biggest trades? What's been your biggest takeaway so far, Dean?
Oh, that's a tough one because there's been so much knowledge.
There has.
It's a tough one. I think the whole trader psychology was a big part that I didn't expect when I got into trading because I'm a naturally, I don't know if anyone can tell, but I'm a naturally confident person. So I just assumed that, this is going to be great. I did paper trade for quite some time, and let me tell you, I was the best paper trader there on the planet. Because if it went slightly wrong, I'm like, oh yeah, but I wouldn't really do that in real life. So I just go back and replay that, and I just made a couple of R's. So, but then when I had my live money, I was like, okay, I struggled to pull the trigger many times, and I'm probably one of the only traders to start with that Jeremy said that I'm under trading. And Jeremy, we keep bringing Jeremy up, and Jeremy is the CEO of Global CEO for Real Life Trading. So if you don't know, then more for you.
You're not the only one. There's been others. Yeah, there's been others that have had that same, and they still struggle with fear. Yeah, for sure. Yeah. And
it was only recent. Well, I say recently, last year when I was with Jeremy for a bit, and he said, "Dean, what's the worst case scenario for you if you lost everything tomorrow?" Because we've been in that situation before. Anyone that knows me, and I said, "Worst case scenario, I move in with my in-laws who live 2 doors down from me. Just that's it." And that's what he said. He said, "Yeah." He said the worst case scenario for him, he goes to Hawaii and lives with Johnny Guaco, another member of the community. Like,
there you go.
Why don't you have that mentality? And I'm like, great. Yeah. It just doesn't matter what I do now. But yeah, how did you overcome that type of thing, Tracy?
It's a daily thing, first of all, but I think recognizing that anything that you do, fear is normal. Fear is natural. And the difference between a new trader and a more successful and experienced trader is they know how to deal with it when it comes up. They know how to recover, just like an athlete. When you are not as athletic or just starting out in your athletic journey, when you get an injury, it takes you so long to recover. As your athleticism gets better and better and better, and you get more superior in your skill set, that recovery time happens a lot faster because you're in better shape, you're healthier, you have better knowledge. There's a whole bunch of things that play into that. And fear is normal. I've had conversations with my son before where he envisions his future, and he's thinking, wow, I can't imagine being able to do like that job. It just seems overwhelming. And I always tell him that, if you were to step into that position right now, it's overwhelming because you don't have the knowledge to deal with the situation that's being presented to you. Your fear, it slows down as you grow into whatever it is that you're learning to do. And that's no different than trading. Your trading account should represent your experience, and your fear will kind of diminish as your knowledge goes up, and you'll be able to handle more responsibility. And that's how it just grows with you. And that's normal. And if you go into trading with that kind of an expectation, then you'll be able to manage it appropriately. And I'd like to say, because I heard the comment today that you need to blow up a few accounts. And I question whether or not, what does that say about me? Because I have never blown up an account yet, but I have gone into trading with that very, very specific expectation that I'm treating this to learn how to do it. And I'm not going to start pulling the trigger until I meet whatever levels. I'm matching it all. I'm taking my time, and I'm getting to where I need to be in it. I'm always comfortable with where I'm at, and I just keep growing. And it doesn't mean the fear doesn't come back in. It does, but I recover from it faster. I have proper coping mechanisms and tools. Make sense?
Why are you such an amazing person?
I am just me. That's it. No more amazing than you are. So it is just me.
I blagged my way through life. I'm surprised I've made it to 37. I don't know how I got here.
Yeah. No, you have, we all have our own value. We're our own assets. We're our own talent. We are all valuable, and we just do it in a different way, right? So exactly. That's just who I am. But anyway, we have an amazing woman coming up. I just met her today, and I am so looking forward to getting to know her more, because I think that, I just think she's awesome. She is the president, CEO, and chief market analyst for thetradingbook.com. And her name is Anne-Marie Band. I am so thrilled to invite her up right now, and looking forward to hearing what she has to say. So Anne-Marie, feel free to take over the screen share here, and welcome.
Thank you very much. I want to make sure that everyone can hear me. And now see me. Right? We should be all good.
You're great.
Yep. Yeah. Yep. All right. Superb. So Jeremy and I have known each other a very long time. Jeremy actually used to be one of my students a really long time ago. So I am old, been around the block a lot of times, and I haven't blown up any accounts, but it's not for the lack of trying. So I am very scientific, and so I thought when I came to the market that if this would be easy. I mean, come on, how hard could it be? Buy low, sell high, everything's great. I never even thought about how the psychology of stepping into a moving river being price might affect me. So I've been trading a long time, and I started with a lot of money because I had been very fortunate in my prior experiences, and I managed to dwindle that down quite a bit. So one of the key things that I had to do was really step back and admit to myself, hey, I don't know what I'm doing. So either I stop and figure it out, or I'm going to run this account to zero. And it was very hard for me to do that because I always thought I was the smartest person in the room. And there's nothing like the market to humble you. There's no other way to say that, but there really is nothing like the market to humble you. So where can you find me? You can find me on thetradingbook.com. I wrote this book. You know what? I wrote that book 10 years ago. Wow. Yeah. And so I've written a couple of books, and you can find them on Amazon. Working in the market is a never-ending process. I love the conversation everyone was having just a few moments ago about putting in the work. It is hard work. Some of us are natural. I was not. I've made a lot of mistakes, and I still make mistakes today, but what I'm much better at is managing risk. And so we'll talk about that a little bit. Actually, we'll talk about it a lot, because at the end of the day, most traders run out of money before they learn how to trade. And it's because they want to jump in the pool and they forget that there are all kinds of sharks in there. And so that is something that I want to share with you a little bit. So I'm going to talk about options. And you can see me talk about options on money.net, on TD Ameritrade. For those of you that have the Thinkorswim platform, I'm on there every other week in the early part of the morning because I love the futures market and commodities particularly. And you can see me on Benzinga also. So I'm really active because I love to share information. A long time ago, back in the Stone Age, I was a mathematician and a neuroscience researcher a long time ago, but it really has helped me a lot. And what it's helped me to do is realize that signal and noise are two totally different things. So I do want to tell you that a lot of us look at noise and think they're signals. And so hopefully what I impart today is a little bit of what you can look at that will tell you more about what you can do in the market. So I think folks have said, hey, it's better for my video to be off. So I'll do that. And then we'll just go right to work with everything else. Hey, listen, you could lose money trading. You could lose a lot of money. You could lose more money than you started with. Hopefully you aren't doing things on margin, but you could. It's significantly nerve-wracking to sit in the markets, realize every single time that you could lose money. And so I want to remind you of that. So today, I want to talk about options. A lot of folks like options. A lot of folks are afraid of options. I absolutely love everything that's highly leveraged in the market. Not so much 3X ETFs and those kinds of things, although you can use them. you just don't want to hold those. Those are terrible instruments to invest in because they get rebalanced in a very important way. And today is one of the major rebalancing days of the year because it's the end of the quarter. And so you're going to see markets slosh all the way around. It's why your AMD is, rolling off the rails right now, because a lot of people are rotating because of what they believe supply chain problems are going to do on the far side of things. But that's a little macro something for those of you who like the macro thing, which I do. I love the macro thing. But here's what we know about options. Most of them expire worthless. That means if you look at things probabilistically, selling them is the more lucrative side of the trade. Now, as a newer trader, you might look at that and go, well, wait a second. If I sell, I have a limited upside. And if you sell naked, you're going to have an unlimited downside if you're on a call. And now let me ask this. How many of us have ever traded options? Okay, so, yep. All right, great. So the next question I'm going to answer for us, and it's how many of us have lost money trading options, and it's everybody that just said yes, right? Because you can lose money trading options because you have to have the time right, and you also have to have the price right if you're buying an option. Yes, it is controlled risk if you are buying it. If you're selling it, that risk becomes much wider, but interestingly, the probability of making money from selling it is actually bigger. And so we'll show that in just a little bit. Third thing is options can be liquid or illiquid. And liquid means there are a lot of us trading them. My favorite things to do are trade liquid options. I love the SPY, the Qs, and I can trade those all day, every day, and make all the money that I need to. And I do trade to eat still. After all of these years, I trade to eat. And so I am very cognizant of risk. All right? And so we'll talk about that a little bit. And options can also be speculative or provide insurance. So here's the thing. If you, I believe I saw one of our gentlemen here say, hey, my AMD looks terrible, but I have my short call. And so that is a little bit of an insurance against downside pressure events. Most of us, however, because of this rise of the retail trader and meme stocks, we tend to buy these calls. Yes, Dean. We tend to buy these calls way out of the money. And so one of the things that we will notice about way out of the money options, it gives us a certain kind of power from a different perspective. So let's say you look at something and you want to buy it way out of the money because you think it's going to X, right? So let's say it was GameStop. It was a huge meme, I don't know, last summer, something like that. And people were buying options really far out of the money, and the deltas were very, very low. And when a delta is low, oopsie, I went backwards for no reason. When a delta is low, it actually tells us that the probability of that being in the money is lower, okay? If you buy an option with a very low delta and you did it 1,000 times, more than 700 of those times, you'd lose all that money if you held it to expiration, right? So if you buy an option with a low delta, all else equal, you're going to lose that money. You're either going to lose part of it or all of it because it's going to expire worthless, because 70% of them do. So when you use option movement and you say, hey, how much is this going to move? My thought comes back to the most important technical indicator that you could ever use on your charts, and that's price. Price is the most important thing. Now, if you're newer, what you have a tendency to do is buy or sell based on your technical indicators, when really technical indicators are the second and third, sometimes the fourth derivatives. And so I'm going to show you how price will approximate what you're looking at. And I'm actually going to show you a trade that you can use, and you can see what's going to happen in the end. All right. So we're going to use Apple as our example. All right. And so here we are on a weekly chart. And I snapped this last night or yesterday, midday sometime. And my thought is, hey, we got a weekly chart. It's possibly double topping, right? We have support all the way down here near 172. Why did I pick it? Because over here, and let's use an annotation, draw with the yellow. Over here in this zone, we have old resistance that's now trying to be support. Now you might go, wow, that could be 170, could be 175. Exactly. There's no one single point on a chart that's going to tell you whether things are going to move in one direction or another. What you're going to get is a range of motion. And the range of motion, which is really that edge that tells us, well, you know, they could be doing that. That's what you want to watch for. Okay? So my thought was this thing's topping, and the last high was somewhere around 183, right? And so I can see in the near term on my weekly chart what's actually happening. It's fairly bullish. I'm sitting above the VWAP, which I love. It's a great tool. But I can see that if I bought all the way over here back in December, I would be essentially flat or just a little bit up. So I know even though I have these big moves down and the moves back up, overall, everything's fairly sideways. Okay? So that's what we're going to look at. Now, let's look at the chains. And so here are the option chains. And have a peek at this. All right. This is expiring on the 8th. And so this is called an iron condor. It is a multi-leg strategy, but it's a very effective multi-leg strategy if your formations are sideways. You might look at this and go, holy cow, how'd you see sideways out of that? That's really part of the finesse of learning how price action moves. Okay? So on the 8th of April, these weeklies will expire. So I sold the 185s and I bought the 190s. That's a short call spread. And then I sold the 170s and bought the 165s. That's a short put spread. And I put them together, and what it actually does is trap everything in between. So as long as my price doesn't go above 185 or it doesn't go below 170, I'm in good shape. Now, the difference between 85 and 90 is $5, but my credit is only 76 cents. Now, why is that? Well, because all of these options are out of the money. And all they have left, they have no intrinsic value. That means anything that I try to buy or sell here, if it expired today, everything would be worthless, right? That's Extrinsic motion means that it's in the money. So all of this, intrinsic motion means it's in the money. All of this will go to zero as long as my price chops around. Now, here's the wonderful thing about selling options. Not only do more than 70% of them expire worthless, but there are only three things that can happen to a stock. It can go up, it can go down, or it can go sideways. And we get to win whether the chart goes up, just not too much, whether it goes down, just not too much, and definitely if it goes sideways. So because trading is a probabilistic game, that's where I want to sit. I want to sit in the fat part of the curve that says, here's where you win. And the reason I have this strategy is because I work in here to eat, right? I work in here to make a house payment, to make car payments, to make travel. Anything that I do, I've got to get it from here. So notice, 7 days, is that 7? 6 days later, on the 14th of April, I now get same strikes. I now get $1.14 as my credit. Now, for those of us who've sold spreads, we know, hey, if there's $5 here, I could lose $4.24, or I could make 76 cents. See, that terrifies a lot of people. But over here, do you see this number? That's the delta of this position. It means that there's only a 2.61% chance that I'm wrong here. 2.61%. That means I have a 97.39% that if I did this 1,000 times, I'm going to collect all of this. And only 2%, 2.5% of the time, I'm going to lose the $4. Expected outcome is going to put me inside of the money space. Here, it gives me a little more time. I collect more credit. Down here at the 29th, I even get more credit. And down here, I even get more credit. So the question is, why wouldn't I just go down here and sell the iron condor? Here's the space that we look at for that. The longer time goes, the more likely it is that the chart will resolve out of its noise, right? If we took a look at this and we looked at it here, just like this one is coming up in the middle here, and I looked at the high, and let's do some annotation again. I use a black marker, it's easier. Let's say I looked at the high there, and I looked at the low there, and right here, I said on my weekly chart, you know what? I'm going to sell this line, which looks like about 150 to me in here, and I'm going to sell this line, right? If I am here and I go, okay, I'm going to sell it, 1, 2, 3, notice it moves out and then it comes back to retest. I literally have 4 weeks where the possibility exists that I will make the money in this trade. But the longer I go forward in time, the more likely it's either going to break up or break down, and then I will be in the money and I will be losing that position. So from that perspective, when you think about, hey, what am I going to do? That's going to give you the best information that you need in terms of saying, okay, I've got about 3 weeks sitting here because this moving average is flat. This VWAP is flat. I'm going to have a sloshing formation that's going to give me room to run. All right. So let's now look at where this very same price action is sitting today. Notice yesterday, what was it, 71? Hang on, let me go to the chart. We'll go back and forth. Yesterday it was 76. And today it is 69. That is your theta erosion or time decay. Notice the delta moving up just a little bit because price action is slipping off of that edge and coming closer to the base of our formation, but still very far away. The next one is 109. It was 114. So immediately, because the charts are moving just a wee bit sideways, immediately you start making money, right? It starts eroding immediately. So this is my favorite space to move. Now, how do I make these decisions? It all comes down to the pricing event. Can you look at something and say, I perceive that this chart has got X, Y, or Z. A lot of us step into trades. We don't know what it's going to do. We're just hoping. We don't have any kind of strategy. I'm from way back in the day when, I want to put the video on for you. I come from way back in the day where we didn't have cell phones. And when you wanted to travel, you had a paper map that told you where things were going, and you wouldn't have any idea whether there was construction, no construction, nothing like that. Now we're spoiled, right? But a lot of us just hop into the car without a map. We go, hey, everybody's talking about X, I'm going long. And that is really something I want to tell you, that you have to work on why it makes sense that you take a position, and then what your risk might be if you're wrong in that way, right? And so the wonderful thing about these chains is that because you can look at them and realize that, hey, it's not going to move into my edge, but if it gets close, theta erosion or time decay is going to give you a much better probability of winning. And this, yes, the Rand McNally's, it's going to give you a much higher probability of winning. And that's really what this is about. Can you get into the charts where you look at something and you go, hey, I'm seeing that this is the drawing that I made for us from yesterday. I'm seeing my price action have a likely topping formation, and I'm seeing that it could come down into the noise below. I love that this is a live example of a trade setup that is extremely legitimate, right? You can look at it and go, oh, I can see that. You can take this trade now, right? Now, we have the employment numbers tomorrow, and we have the Fed, who may or may not do something wacky, but I can tell you this, these guys, they're going to slosh around, and the volatility is going to help you. So you can, here's something else. Oh, forgot to tell you. Listen, do not take an option and expect you're going to collect 100%. A lot of us sell options and go, hey, I'm not buying that back. I want it to go to zero, or I'm going to buy back for a penny. The market doesn't really care what you want to do about that. The market's going to do what it's going to do. And so the way that you figure that out is you go to price. And if I sit here at this 172 area and I don't bounce, I'm going to cover it, because I expect that I'm going to bounce off that level. And if the market doesn't do what you expect, then you have to say, what if I'm wrong? and what might happen if I leave this trade to collect. Now, you might go, well, it's, that's nothing. But if you've got 10 or 20 of those on, it's going to matter, right? The great thing about options, which I absolutely love, is the power that they give you. But to steal, Peter Parker and Uncle Ben, with great power comes great responsibility. And you really have to be responsible for the risk that you expose yourself to. All right. So what I want to do is open the floor up to questions. I'd love to pick an instrument and just absolutely set it up for us so that you can see what it looks like and how you might set the trade up in terms of what might be going on. Tracy, do you have one? Cost. Oh, perfect. There we go. Let's take a look at Costco. This big box has been really great. I'm a pretty big macro gal, and big box is going to have supply chain problems like everyone else, but this thing is just doing very, very, very well. So let's take a look at it from a weekly perspective. It's breaking out really fairly nicely. So here is the question. What's happened that the traders have done just lately? Just this week, they've said, you know what? I'm breaking that support. That old resistance area is going to become brand new support for me, right? So this is a very solid trend formation, but it's also done the first breakout over the resistance zone. So let me show you something else. What does this stock behave like when it breaks out? So have a peek. Here's the last breakout formation. It goes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks before it retraces the breakout. That's pretty crazy, right? For this one down here, it doesn't retest it at all, right? From March, it just breaks out of the range and moves to the north. So immediately from this space, I will say this is something that gives us directional motion. So you can do two things. You can sell a short put spread. And what the short put spread does is allow you to say, okay, let's just pretend that this comes back and it tests the VWAP, the last big breakout area. So, 525. Okay? So let's look at the different ways. We can sell, we want to go bullish because everything's upside, and this chart has a tendency from a weekly perspective never to retest or take 16 weeks to do it. So we have to look at things from a bullish perspective here. So easy one, short put. Let's see the short put spread. Let's see what we can get out of it. All right, so here we go. Costco. And we are going to look at, all right, that trade's done. We are going to look at April, see if we get good kinds of prices. So over here, we've got our volatility. It's pretty light volatility here in terms of internally. So we have 525. That really doesn't give us very much, right? That's 23 cents. So for me, no cigar. I don't want to risk $5 only to get 23 cents. I could, but I don't want to. All right? So the next thing we can do is say, all right, let's assume that this price action is really going to move forward Okay, that's the 29th. Here is this one, 525, maybe a little bit better. No, twice as much. Still, nobody's priced in, and that's because this number is small. See, if we go to something like Tesla, we're going to see the number is monstrous. You're going to see, sorry, these are all my trades, times past. See how this number's in the 50s and Costco's in the 20s? This is not a bad place to buy yourself some options, right? So let's say you expect things to go off the rails crazy. It's going to be great. Everything's going to be wonderful for the big bucks. And so you're thinking to yourself, I'm going to see, I think these guys will go to 590, right? Well, look at what the market has. It's got 3,600 for there. So people are testing the 600 area. So we can go to do something called a butterfly. So the butterfly says, I'm going to buy a call spread, and then I'm going to sell a call spread, and that's going to give me 28 cents, $28 per butterfly. That means that's the most that I can lose trading this position. Now, what can I win? Well, between 600 and 605 is $5. So I can win $4.72, right? That's if it goes to 605. If it doesn't and it stalls out, I just lose my 28 cents. Okay? So that is really good. Let's say you think to yourself, you know, this chart is going to come down before it goes up. Calls are still 2-to-1 right there. But this chart's going to go down before it pulls up. Let's say, wow, that's moved to 18 cents. It's not bad. So let's say you're thinking to yourself, hey, I think this is going to fade. I think it's going to come back to 565. Right? Let's see where the support ledge is. Let's go back here. I know I'm about out of time. Support ledge is the 525 area, 566. Yeah. All right. So let's say you choose not that one. You go to the 560 area, and then you go to 555. You sell. You buy a put spread, and you sell a put spread, and the middle strike is the one that's shared by both. That's a butterfly. It's going to cost you 13 cents, right? Tons of upside there. And that's if you think the chart's going to make a very big move, all right? So those sorts of things, if you see a chart sort of sitting through a space and it looks the way, the way this looks, where it's really just run off the rails, it could easily run into that area. And we know it has a tendency on a breakout to really run. And here it is breaking out. So it could pull back and then break out. Either way, you're covered for both sides of that trade with just an exposure of 28 plus 15, right? So 45 cents or $45, right? To see how that goes. All right, I'll open it up to questions. You know, if you are interested in watching options move day in, day out, I trade these all the time, and you can visit us at thetradingbook.com. You can see us also on StockTwits or Twitter or whatever. And thank you very much for giving me the opportunity to share information with you.
Thank you, Anne-Marie. That was fantastic to watch. I feel like we're all in the company of greatness here. I was just happy to sit and just watch you go. Can you stay?
Pardon?
Can you stay? Can you just keep going?
Oh, yes. Oh, of course. Sure. I could talk for days, but you wouldn't want that.
Oh,
Your eyes would end up bleeding.
Let's, as you say, let's throw a few questions at you, if we may. So, right back at the beginning of the presentation there, where you were looking at the iron condor.
Yes.
So just to maybe get your perspective on when you're looking at putting on a trade like that, and you're looking at, say, an iron condor versus looking at maybe a strangle. What are you looking at in terms of the mechanics of that, the trade of that?
Excellent question. It is, what is trend? And what does the chart normally do? So let's go back to Apple and compare the difference between these two charts, right? This chart often breaks out and then returns to test its areas of congestion. So this looks like a breakout area, looks like it's going to break out, turns out and retests this congestion. This area looks like a breakout, comes back, tests its congestion. So Apple has a tendency, and it's because it's in the Dow, it has a tendency to retrace big moves by a certain percentage. If we want to use our Fibonacci, we can see, oh, for heaven's sakes. Yeah. Yeah, we can see that it pulls back 78%. If I could get the chart back on the screen. Yeah. And so I will look at how do traders behave in this kind of environment, right? And if they behave the same way, I'm going to trade the way they behave. And so I like to just trade a few instruments because I know what the participants like to do. So if you're looking for an iron condor, you want to see some sort of range-based formation. You want to go to a weekly chart and you want to see flat moving averages. You want to see price action that wiggles on top of itself, right? You wouldn't dare take, let's see, what might be something that goes straight up? I don't know, back in the old days, when things were going very nicely for Riot, this was a rocket ship, right? It was just doing tremendously well. You don't want to sell an iron condor if things look like this. Why? Because one side of that's going to get blown out. But you would want to do it here because it's sideways. So you can look here and look here, and even if it blows out of the top, you know that it's going to come back because the moving average is flat. And so that's really what you want to do. When a chart is going to break in one direction or another, which Costco might break tremendously to the north, it might have its shoes shaken because market news and come into the support edge, you could benefit from both of those, right? And so the butterfly allows us to do that. Because it's got so much drama to the upside normally, it's not an iron, I wouldn't put an iron condor on this one. So it's really all about slope. You might look at it and go, but Anne-Marie, this is sideways slope. Absolutely. That's absolutely right. That's why I put a butterfly on both sides, because it could come in or it could move out. But this is very bullish. And so because it's got such upward drift, I don't want to sell at the top of the formation because I don't know who's going to buy up there. And it could keep going, especially if it's, got some kind of short squeeze on the other end of it.
Yeah, it's fascinating stuff. And it's also lovely to see simple charts, like overlay, like 20 indicators or whatever it is on top. Like you're like, no, here it is, support, resistance, this is the trend, this is what I'm looking at. And out of interest, do you tend to be more like you'll look at the chart and then it's the option chain, or do you ever do it the other way around? where you're looking at volatility, options.
That's a good question. Okay, so that comes to the space of if I look at something and it's got, 200% volatility, right? I'm not buying anything there. I'm going to sell it no matter what, because probability is going to sit on my side. Now, if I see the 200% volatility and it's going straight up, I'm going to sell the put side of it. And then maybe way out, I'll sell the call, but I'll usually just sell the puts. And so that's what I'll do. Sometimes I go, you know what? I don't see any nice setups. I'm just going to short volatility, and I'll just go to wherever that is and I'll put on a trade. Sometimes it's Tesla. Sometimes it's, way back in the day, I used to trade First Solar. And for those of us that trade options, the first time First Solar put out its options, the difference between the bid and the ask was $6. Okay, so what that means for those of us who are, I'll use IV rank. I'll use IV rank. For those of us that don't really quite know, it means if I buy something and I turn right around and sell it, if there's a spread difference that's $6, I'm going to lose no matter what. No matter what I do. If I sell it, I'm going to lose trying to buy it right back. If I buy it, I'm going to lose trying to sell it right back. And so First Solar used to have those. Now those are tight, but I believe that the option chains are still a little bit extended. I think those chains normally still are about 50%. So I'm going to look at this, and I'm going to say, wow, that's pretty sideways. It's coming off a base. It's got all kinds of room to run because it literally has done nothing but move there. So, I'm going to look here at 67, and I'm going to sell the put. And I'm going to look at that and I'll say, all right, what can I get for the 67 put? Well, I only get 92 cents in May, so not going to do that. So I'll go to September and I'll go, what do I get for the 67.50 put? I have 315. So guess what? I'm going to sell the 315s. I'm going to sell the 315s, and I'm maybe going to buy the 55s. So a little bit wider, but there's all that theta erosion, all that motion there for that upside space. And if I want to buy the top of it or sell the top of it, I'm going to look at, well, you know what? It sort of collided right there. That's 112. I don't know what the chains are going to look like there. 112 is really, that's way up there. So I might try the 110, and I could turn that into an iron condor, right? It's sideways. I've got $10 of risk on one side and $7.50 on the other side, but I really am sitting in a place that the chart is not going to do much else, because it's essentially told me that. It's given me the entire range. And because there's so much volatility priced in there, with the implied volatility up at 55, 60, I'm in great shape to sell those. So yeah, I am a serial options seller. I'll buy them on days like today. So let's have a peek, and I'll show you what I'm doing here. Let's go to SPY. Oh, is this okay? Am I still holding all right on time?
I think we're just coming near the end.
The end?
I think
okay.
we might have a few more minutes there.
Yeah, okay. So if I take a look at SPY, I can see that what's happening here is my price action is fading a bit. And so I am going to look at the weekly options. And I'm going to think to myself, all right, if the SPY does what I think it's supposed to do, it's going to lose this area of support and maybe end the day down there at 153 or 152. And so I literally will look at that and go, all right, I know it's expiring today. It's going to be cheap. So what might I do? I might buy, if it, at the end of the day, prices have been spiked all over the place. I could buy the 454s and the 457s. That's 90 cents. And if it does anything like it did yesterday, one of these is going to go to, $2 and the other one's going to go to 0. And I've made 100% in just a little bit of time. So that is, you've got to be very careful doing that. You really have got to know what you're doing. But this is the place I love to sit. I spend all day in here. So that's it. Hey, listen, thank you so much for having me. I really appreciate it. You guys are great. I cannot wait to connect with you further. Most of you I was meeting for the first time. And I'm really hoping that we can connect across the chains and help as many people as we can get on the right trading tracks, as it were.
Thank you so much, Anne-Marie. It has been an absolute pleasure. And just so you know, I've added your book to my list because one of my podcasts is called the Elevated Trader Podcast. We read trading books, we read mindset books, and then we discuss the takeaways. We read it with intention. So your book has just reached that list. And
thanks.
Yeah.
It's a very emotional book. I took a lot of pages out of my journal when I was really struggling. So it's certainly an in the kimono kind of book, which I think is why so many people liked it, because it's very real, and the struggles in terms of the movement from complete unconscious incompetence to unconscious competence is straight through the pages.
Love it. Love it. I can't wait to read it. So thank you so much. Greatly appreciate it. And everyone will just take a couple minutes to stretch our legs, and we'll be back here for our last presenter. Right back. All right. That's been awesome. And just so to answer the question earlier that Dean asked, what do I do? Well, that time I went and let my dog in. So needed to take care of that. Dean, are you around? You coming to join me here? Otherwise, I'm going to introduce our next guest, Xochitl Rodriguez. She is a very dear friend of mine, love her to pieces. She is an author, a very exceptional businesswoman, and I am extremely excited to see what she has to say today. Dean, nice of you to join us.
Me, Tracy.
I did.
I'm trying to steal the show. Honestly, what's going on here?
What were you doing during the break? Did it involve a glass of wine?
No, I wish it did. It involved my children have just come back from being out because the webinar, and they just all kicked off. So I had to go and be referee and try to split up my 6-year-old and 2-year-old who, for some reason, decided to fight. So nothing great.
That is awesome. So thankful that you joined us. But I am going to pass this off to the amazing Xochitl Rodriguez. Xochitl, feel free to take over at any point. I am so glad that you're here, and let's get the ball rolling.
Thank you so much. Thank you for the introduction, and I also like to thank everybody that has presented. What a panel you put together, Dean and the UK team. Thank you so much. Such a privilege, and it's been so much fun. So many takeaways. So I appreciate everything. So let's go ahead and start. So today, I'm going to be talking about how to transition into a successful trading career with the trading plan. Okay, so just the typical disclaimer. When we trade, we're taking risks, and it is our responsibility to know what those risks are and what we're doing. All right, a little bit about me. My name is Xochitl Rodriguez. In case you're curious, it's an Aztec name. So it's now been popular in the last 500 years. Well, my parents really liked the name, and the name is Xochitl. It is a conversation piece as an adult, but I did not like it as a child because people would bring a lot of attention to it, and I wasn't ready to handle that type of attention. Currently, I'm the president of Real Life Trading, which is such a privilege. I love it. It doesn't seem like work. It's very busy and we get a lot of results, but I love what I do. I get to be surrounded by some amazing people and really be able to make decisions to help change people's lives and enrich lives. I've been an entrepreneur. That's where I come from. That's been my life. I didn't grow up wanting to be an entrepreneur. I didn't really know what it was. When I was in school, I was in communications and I wanted to be in human resources. And I loved it. It was great. But then I got to the point where I wanted to be promoted. And the only way for me to get promoted was if somebody died or retired. And I didn't want anybody to die, and none of them wanted to retire. So that was irritating. So I wound up leaving to go become a school teacher and taught kindergarten for 5 years. And that was fun. Then I had an opportunity to open up a business. And so I left teaching to open up the business because I just kind of figured, well, if the business fails, I'm going down with it. I'm not putting my money and allowing somebody else to manage it. So did that, loved it, and then opened up another business and another business. And my brother and I have been entrepreneurs and have shared multiple businesses in different parts of California, Northern California, Southern California. And we've just had a lot of fun and a lot of great learning experiences. I am a new author. I am an advocate, and I'm a lot more. So hopefully we'll get to know more of each other, and you'll learn a little bit more about me and what a trading journey can look like. All right. So when I say I'm an author, this is brand new, fresh off the press, less than 24 hours ago. Jeremy Alexander Newsom and I wrote this book specifically to teach children how to trade the stock market. We are so excited about this. Jeremy, for years, has been told that writing a book for children's education would be one of the worst investments. And he's always known in his heart that it was not. And so we came together and we wrote this book about 4 children who hang out and trade. And they don't hang out and trade. They hang out and play video games until the little girl in the middle decided that she didn't want any more virtual coins. She wanted real money. And so that leads them off onto a journey of finding out about the stock market. And this is actually the first of a series in books that we are writing to specifically for children. So we're very, very excited about that. All right. So trading as a career. This is it's trading, I think, has these images that people will associate with what is a trader. So when you think about a trader, what do you picture? What thoughts and images come to your mind about a trader? Do you picture yachts, a bunch of bikinis, flashy cars, overt brand clothing? What does it look like to you? Is it somebody in a New York skyriser stressed out in front of the computer? We sometimes need to really stop to think, okay, what are these images that we somehow created in our mind based upon media, what this looks like? And I'm going to share with you what my journey was like. So this is the beginning of me trading. This is what I looked like. I was pulling my hair out, trying to figure out how to trade. Now, I did not begin with real life trading. Okay, I paid over $20,000 for a trading education. And when I compared that to a university education, I thought I was getting a deal. I'm like, oh, for $20,000, I can learn how to trade? Seemed like a great investment. And so after my education in that one company, I still was not profitable. And it was very frustrating because I thought I paid $20,000. I should know how to trade. I should know what I am doing. And the fact that I wasn't made me question myself and made me think, well, maybe everybody else is right. Maybe you do need to know a rich aunt or uncle in the industry that can teach you the ropes. And I really wanted to give up and did. And I did blow accounts. I have blown a few accounts. But for some reason, I kept coming back to it. I kept coming back to trading. And I think is because I just had something in me that I just knew that it's got to work. If people are making money in trading, why can't I? I've studied, I've done what I was told to do. Why am I still losing? So I actually went online to YouTube to try to figure out, okay, what am I doing wrong? There's obviously something wrong because people are making money and I'm not. So that's how I found Jeremy Alexander Newsom. That is where I started to just stalk him, really, and was watching every video he made and was going back and listening to all his prior videos. And I thought, what's the catch? What does this guy want? Again, I just paid $20,000 and he's giving away this information for free. I was upset because did I just throw away money and this guy's giving it for free? I'm like, there's got to be a catch. And the more I listened to Jeremy, the more I saw just how genuine he is. And I probably have known him for about 6.5 years, 7 years. And who you see on these videos is who he genuinely is. And I was very impressed with him. And I had a session, a trading session with him, a mentoring session with him very early on. And I got to see just how amazing he was. And I made money right away with what he shared with me that day. And it was absolutely great. The journey has not been easy, but I can tell you that this is what my life looks like now. Very different. This picture was taken a few weeks ago on a private island at the World's Traders Retreat. The Impactful Traders Retreat, a very special time. And I share this not to brag, but to tell you just how different life can be when you choose to do something and dedicate yourself to doing it. Now, again, I really looked like this first woman pulling my hair out. I was about to lose my house. I had sold 8 businesses, and all of a sudden the payments stopped. I had to use up all my savings. It was a true nightmare, And to try to trade when I've got to pay bills, when I'm now starting to use credit cards. I learned that I am a horrible trader when I am emotional, when I feel I have a gun to my head. And I worked with Jeremy. He was my mentor, it still is, but I'd worked with him to specifically help me get through these blocks. And he said, so you need to stop trading. He says, you need to stop trading. And that was the worst thing I could have heard at the moment, so I thought, because this is what I wanted. How is he telling me to stop trading? I'm so bad, even Jeremy's telling me to stop trading. And I started to create all these lies in my head about why I needed to stop and why he said this. And that was the best thing because it helped me to realize who I am as a trader. So let me take you on this journey. All right, so the first thing I invite you to do is to ask yourself, why do you want to trade? What are your whys? And actually write them down. I do write them down and have them available because these are the reminders, because things will get hard in trading. And so when I have my reminders of why I'm doing it, it reminds me to keep going. For me personally, I love to go see my nephews play baseball. I got to see this little one at his first T-ball game a couple weeks ago. I get to go see my older nephew play. And, sometimes they play during the day. And I get to travel. I get to go out and see them play. And it's important for me to be there. I love having new experiences. I love being able to speak and share about my struggles, to help other people not have to dwell in them for as long as I dwelled in them. And then I like to make a change and have an impact in the world. So these are my personal reasons why. So what are your reasons? And again, this is what's going to keep you going when things get tough. And also, I like to write down, when I'm a successful trader, I will. What will I do? Well, currently, what's on my list is I want to surprise my family with an all-expense trip to Disney World. And it's not just like, it's not just me, but like there's 3 families that I want to sponsor and take them all and just give them the time of their life and make a memorable event, a memorable time. There's still quite a few little ones in the family, and I would love to do this so that they can see what they can do. I want to attend a gala event for Operation Underground Railroad, who helps save children from sex trafficking. And not only attend the event because I think I'm going to be there in a couple of months, but I want to sponsor like a $10,000 table, a $15,000 table, and then just invite people to join me and just be able to do something good for others. And then I want to invest in real estate. So what are the things you will do? And again, when we have these in front of us, it reminds us why we need to keep going, why it is that we must continue to work through all the obstacles that will come. So let's talk about some myths. What are some myths we've heard about the stock market? It's for the rich. That's a popular one. Everyone seems to think it's for the rich, but it is not. It is not for the rich. Anyone can trade. You can trade with as little as $5. We encourage children to begin to trade at a very young age. So it's not exclusively for the rich. Cash is king. Well, in this time we're living right now, we know it's not. I grew up with mattress money. It's like, if there was money, it was in the mattress. That's what we did with it. Well, I now know that no, that cash is not king. It is, we're wasting it if we're not having it grow. It's gambling. Well, it could be. If you do not have a plan, it is definitely gambling. But with a plan, you are not gambling. You are using market information to make decisions. You are following a plan. It's complicated. It could be. You can have all kinds of indicators on the chart and make it very complicated, but it does not have to be. You can have a plan that's very simple, that so long as you're consistent with it, you can see that you could be profitable. Some people say, well, I have a financial advisor. I don't need to do this. Well, I am not a financial advisor yet. But if your financial advisor is giving you a return that you are happy with, then you might be okay. But most people are finding that their financial advisors are not giving them the return they're expecting. And so having the control and the education to be able to take control over your finances is very important. And some people say, well, I don't know how to read company financials. I would never be a good stock trader. Well, if you know Dean Bradshaw, that'll take care of that. He will be able to teach you how to read company financials. And you don't have to if you don't want to. It is not a requirement. So what do you need? What are the things you actually need? You need a computer, and I know everybody here has one, or a phone. You all need internet, and I know you all have it because you're here. And you need some money. Those are the tangibles, well, except for the internet. I guess that's not very tangible, but those are the things you're going to need. Now, what will keep you dedicated? You got to decide that this is really what you want. You have to commit to getting through all the speed bumps. You have to stay focused, because if you're not focused, life will happen. And next thing you know, you're going to be out in left field wondering, what happened? This is not what I had planned. Well, if we don't follow our plan and we don't stay focused, it's very easy to get swayed. And then you will experience the success. The other question we get is, how long will it take? Well, that really depends on your strategy, your plan, how much time you study, And if you don't have time to study, we have robots that'll trade for you. And I'll give you suggestions of different time frames for different availabilities. And really, it's also how we use the time we have. You know, when I go to my nephew's games, sometimes when I have to travel, you know, sometimes they're like a couple of hours away or 20 minutes away and I get there early, I will get on my phone and read or listen to a podcast, or I try to maximize my time. And I've made it a habit of doing that. So I invite you to do the same, like really look at your time. And, you know, some people like love to be in pajamas and watch Netflix. Like that is torture for me. I do not like to be in my pajamas unless I am asleep. And I don't really like watching movies. They make me cry and I don't like to cry. So, you know, so we all have different things of how we want to spend our time, but start to take a look and see where can you shift what you're doing and use that time to learn something new. And in this case, you'll be learning stock trading. Anything worth knowing is worth scheduling. Very important, because again, time will pass, life will pass us up. And when we schedule our time, then we're more focused on what it is that we want to do. We find that we are reaching our goals because we're scheduling them. All right. So besides all of this, what are some of the next steps, the technical steps that you need in order for you to learn to trade? You need a trading education. And Federica had raised an excellent point earlier about anyone can go out there and say they're educators. Follow my trading plan and make $1 million. Now, be discriminating. Be aware of what it is and the company and the reputation. Who are they? Now, I am absolutely biased. I am going to say go to Real Life Trading, get a free trading account, get the education, get everything you can from Real Life Trading, because that's the company that changed my life. That's the company that I can vouch for. Also, you're going to need a charting account. I happen to use TradingView. There are many out there. But to start, I want to give you basics of where you can start. You don't have to, you're not stuck to any of these. These are suggestions for you to learn. The next one, I know I am going to make professional traders cringe with this, but you need a broker account. And yes, at the moment I am recommending Robinhood. Now, professionals do not typically use Robinhood, but I do find that new traders, it's easy for them to use it. So if that's what it's going to take to get you to trade, open up a Robinhood account. And I'll explain more and go into a little more depth on all of these. And then make the time to study. Schedule that time in. All right. So for your education, the reason you need an education is because you have to understand what's in the chart. You know, what does it tell you? What information is available? And in all honesty, you can start with our kids' class. Jeremy did an excellent job this week of explaining what is the stock market. You know, in very simple terms, we can start off simple and we can always learn and do more and grow. But start with all these free classes. You can see here we've got the beginner class, the intermediate, the advanced. That is more than enough to get you going, to get you profitable, and for you to have everything you need. There's one specifically for day trading. And then we do have paid courses as well. But a reputable trading education is essential. For TradingView, this is what we tend to use. It's very simple to read. If you're not familiar with trading, this is going to be overwhelming. What am I looking at? But we have a ton of tutorials that our team has created to let you know and introduce you to, okay, time is here, dollars are here, stocks are here. You can have different lists. This is a candle. This is a high wave candle. And all the information is broken down. So this is a trading chart, and the company TradingView is one of many and then TradingView, you can start off with the free account as well. All right, so this is the little more controversial ones for those of us that have been trading for a while. It's you need a broker, and the broker is the company that holds your money. They're the ones that are actually going to be placing the trades and settling it and putting it back to your account. There are other companies. There's Fidelity. There's TD Ameritrade. There's many, many companies. This is just one that Schwab. Yeah, thank you, Dean. So there are many. But if you want to keep it simple and just get you started, you can start off with Robinhood. All right, and then time to study. Do you see how many times I have mentioned schedule time to study? That's because we need to do that. So with trading, there's a few things I can guarantee you. And yes, I'm putting out a guarantee into the world. I can guarantee you that you will be right. You will be wrong. You're going to feel like you are on top of the world. You're going to cry in front of your computer. You're going to win and you're going to lose. All of these things happen when you trade. You can easily go through all these emotions on a 1-minute chart. Because when we trade, at least for me, I learned about my personality. I thought I was a very disciplined person because I own my businesses, because if I didn't do things, they wouldn't get done. I've always worked and have done things. And so I thought I was walking into trading already disciplined. And what I found out was that I was not. I really was not disciplined. I had a plan and then I would adjust it. And I would decide that, well, yeah, it's a plan, but it wasn't really a plan, it was a guide. And I allowed myself to change it. And I was going through all these emotions. It's a very emotional journey. And not only that, but if you don't have a community of traders that can help keep you focused, that help you stay engaged, trading can be a very lonely sport. It is the one time where you can work and lose. Like if you have a job, even if you do nothing all day, your boss is still going to pay you. But when you trade, if you're wrong, your money is gone. And if you don't know what you're doing with options or spreads or anything, you can lose a lot of your money, if not all of it. So it's important to understand that you will experience a lot of emotions. But when you have a plan, your plan allows you to stay focused. A plan tells you, do this, do not do that. If this happens, then do that. If then, because you want to remove any emotional decisions. I can tell you when I was losing my house, when Jeremy said you need to stop, it was because I was so emotional. And Jeremy said, if you don't stop trading with real money, you're not going to have any money to trade tomorrow. Very difficult words to hear when the only thing that I could see was that I needed money and I needed it now to pay the bills, to not lose my house, to pay off the credit cards, to have all this financial burden just be lifted off of me. And so if you have a job, do not quit your job to trade full time. Okay. There is a plan for you for when you should trade, you should quit your job if that's what you want to do. But usually it's after you have consistently been able to make more than what you are currently making with your trading plan. Okay, so I don't recommend anybody rush into trading and just forget about your responsibilities, forget about your job. You can trade during the day if that works for your schedule. You can swing trade. You can do futures. You can do so many things. But keep your income coming until you really have a plan that you are comfortable with and that is making you money. So once you're a trader, you really just have, I lost that one. Oh, I lost my slides. There we go. Sorry about that. You only have one job as a trader, just one job. And you will hear Matt DeLong say this over and over again. Execute your plan. That is really what traders do. This is not an emotional roller coaster, okay? This is not something you're going to get high on. If you find trading that you need to have that rush, and trading is probably not the best thing for you. Trading should be boring. You should look to find what suits your plan and execute it. If you want a rush, go get on a roller coaster, go do something, jump off a plane, do things along those lines. But when it comes to trading, it's about discipline and it's about following your plan. And your plan should have a plan for profit, which are your targets, your loss, which is your risk. How much are you willing to lose? And at real life trading, we stress having a physical amount, a consistent physical amount. So when I started trading, the most that I was willing to risk on any trade was $100. After that, I couldn't lose more. I shouldn't lose more, right? If we're following our plan, we should not be losing more than what we said we were going to lose. And when we're consistent, we can see it in our results, because even when we lose, we begin to learn to lose less and then have our profits be more and always be ahead. Another thing with our risk is within real life trading, we teach you how to manage it. So even if you have, $100,000 account, I would not recommend that you start with a very high dollar amount. Start with a small risk, get comfortable with your plan, get comfortable with your broker. You can paper trade to get comfortable with it, but you don't want to risk all the money you've worked for and blow it all up. Let me show you a sample trading plan. So this is my trading plan for Momo. Momo is a momentum strategy, and it's based upon the 30 minutes. So here's my strategy. And Momo is buy or short, and short means I'm making money when the stock goes down. And the indicator is off of the 30-minute chart. I use these same stocks, and then sometimes I allow myself to have one bonus. But I had to put it in my plan. Otherwise, these were the only ones that I could trade. And then I also allow myself to take trades from the rooms if they make sense and if I have traded that stock before. So I make it a rule to not trade stocks that I'm not familiar with. And then here are my rules. These are my personal rules. I cannot take more than 30 trades in a month. I cannot take more than 2 trades in a day. If I lose more than 2 hours, I'm done for the day. I cannot lose more than 10 hours in 1 month. Like I'm done. And if I lose the first few days and it adds up to 10 hours, then that's it. I'm done for the month, because that would allow me to trade for the next month. And instead of taking live trades, I wind up back trading, and I wind up using that time to do something else. I have specific rules for when I can enter, and that's when the indicator is set off. And I must say my position out loud before submitting it to my broker. I have made that mistake many, many times. So I make it a rule. And then I have my target. So when Momo tells me to exit, that's when I exit. Pretty simple. So again, this is a sample of a trading plan. Very simple. It could be more complicated. I can have more factors in it. But I want to give you an idea of just how simple and easy it can be. All right. This is a Momo indicator. This is Matt DeLong. I wanted to use his picture in here because he created this strategy. And see where he's pointing to this green arrow pointing up? This is the whole strategy on Momo. When you see the green arrow, you buy. When you see the red arrow, you sell. Buy, sell. Buy, sell. Sorry, I'm trying to move the chat out of the way here. Buy, sell, buy, and then at some point you'd be selling. Can you do that? Is that simple enough for you to follow? Can you follow this plan? Buy on the green, sell on the red. That's it. And to make it even easier, There are alerts that you can set. So when it goes green, you get an alert telling you it went green. And when it's time to sell, you can get an alert on your phone telling you, hey, it's time to sell. Very simple. Very simple. All you have to do is execute the plan. You could make it more difficult, right? Here's TradingView with more indicators and more stuff. And I am sure that to somebody, this would make sense. Like to me, this makes no sense. I have no idea what this thing down here is. I have no idea how to read it, what it's telling me. But I wanted to show you that you could make things complicated, but why? Just keep it simple. Keep it simple. The objective is to be profitable. And if you don't have time, but you have money sitting around and you want to put it to good use, we do have trading automation. And this is a robot. And robots make great traders because all they do is follow the plan. There is no human emotion attached to that. And so that is also a great way to have your money working for you while you learn to trade without emotion. And the emotions will come, but it's really doing it anyway. When you see that the candle is coming down and it's going to stop you out, you just let it stop you out. Because you have to remember that it's not only about this one trade, but it's how is your plan and your strategy, how does it do over 100 trades? So if I trade and lose 5 times in a row, but I know that my plan has showed me that over 100 trades, I am profitable, then I need to remind myself and have that discipline that I'm not going to switch it into a new strategy. I'm not going to, some people bar hop. Well, some traders will do strategy hops. They go from one strategy to another, to another, to another. And so it's very difficult to be profitable and consistent when you're constantly moving the target. So trading automation allows us allows the robot to trade our money without any emotion. And you can determine if you want it to be aggressive or if you want it to not be so aggressive. So that's available. And so trading, so how do you reach your goals? So again, know your why, repeat your commitment to yourself, executing on the time to study, taking actions, and you will see your results. It has been quite a journey for me. As I said, it's not been easy. There were times where I would hang up the phone with Jeremy and I would just cry because it's like, how can I suck at this so bad? It's like, what is wrong with me? And I would beat myself up when in reality, it wasn't that there was something wrong with me necessarily. It's that I wasn't being consistent with my plan. And in real life trading, you'll also hear a lot of people talk about the consequences if they break their plan, right? Because in a 9-to-5 job or in a regular job, if you keep messing up, eventually they can fire you. But with trading, if you keep messing up, there's no one watching you. You know what your account is doing, but nobody is there to say, to discipline you. So we have to discipline ourselves. And so we will create a consequence. And when I first started working with Jeremy, he said, what's your consequence going to be if you break your plan? And I wasn't sure. And he said, well, I'm going to give you an option. You can either dye your hair blue or you can jump off a plane with me. And he knew that I'm afraid of heights. So I said, Jeremy, that's kind of rough for you to say that. I mean, that's very extreme for me breaking my plan on the first time. And he says, you've been doing this for a long time. You don't get to give up cookies. You have got to be successful at this. So it has to be something that's going to scare you into keeping and following your plan. And so I did. I've not jumped off a plane and I don't have blue hair. So far, so good. Thank you so much for listening and allowing me to share about my experience. If you'd like to hear some more of the details to my trading story, there is a YouTube video. You can just go to YouTube, search Real Life Trading Sochi, and it should come up right away. And so thank you very much.
That was really, really fantastic, Sochi. Thank you so much. I don't think it could be overstated enough the importance of a trading plan. It's absolutely essential. I'll self admit that when I first started trading, probably like most beginner traders, I didn't really have a well delineated plan. And I did a lot of that strategy hopping, as you talked about it, and also instrument hopping. And, a lot of our traders today talked about a focus, talked about how they sometimes just trade very few things or a very particular type of strategy or a very particular type of instrument. Do you have a specific approach to trading that includes a focus like that?
Yeah, so I do typically do one strategy. So I've been doing the Momo until I learned Matt's Tesla snapback strategy. So I've been doing that one and I love it. I love it because honestly, I don't have to think. I just have to follow. I just have to follow the plan, and I'm in and I'm out. And then Tracy Ball created an indicator for it. And so I like to go with more of the simple, if this, then that. So that's what I tend to go for, is just if this, then that.
Yeah, and the Momo strategy is really fantastic, not only because it provides you those signals, but because there is a readily available indicator within TradingView that you can put directly onto your chart. If you look at in TradingView under Matt DeLong, DELONG, and you will see exactly as Sochi is showing here on the screen, these red and green arrows signaling you in and out of the trades, and tells you exactly what to do. That element of automation that so many people are seeking to compete with those algorithms in this new market.
Yes, and and even with the Momo indicator, I started to notice that when a stock reaches a recent high or an all-time high, then I allow myself to get out. And I had a mentorship group that I shared that with them, and we started to practice that. And so sometimes you miss a little bit, but sometimes you get to keep this extra chunk here. And as you saw in my plans, I do have that in my plan that I can exit at the all-time high or the all-time low if I've set alerts, so that if it crosses over, I get indicated, I get notified. Otherwise, I just let it ride and let it do what it's going to do.
And another thing I wanted to ask you, put you a little bit on the spot here.
Okay.
You talked a bit in your presentation about the importance of sticking to your plan and not deviating. But do you consider your plan to be a fixed and never changing document, or is it something for you that grows and changes over time?
It is something that can grow. But I try to stay fixed on it and not just change it because it didn't work for 4 times. And as I continue to grow as a trader, it's like if I have the discipline to go back and back trade a strategy or a rule 100 times, then I can go ahead and change my plan. Otherwise, there's no need for me to change it. If it's profitable, why change it?
Yeah, that's a fantastic point to show there, that there should be a threshold, a very high threshold for change, not just losing 4 times or having 1 month of struggle, right? Because we trade in different market environments, and as a lot of today's traders talked about, not everything works in every environment, and that's not a reason to change your plan because it's not working this month or this cycle in the economy or in the market. Going ahead and back trading 100 times and seeing something is a better reason to modify a trading plan.
Yes, and and when Matt introduced us to his new strategy, I trust my mentors, I trust my teachers. So I was willing to take it on with the current plan and just absolutely love it. And I intentionally will watch on the time frame that he specifies. I intentionally watch because I am personally working on watching the candle get so close to my stop and just trying to be neutral about it. So I'm not moving my stops when I'm not supposed to, but I guess I'm like torturing myself in a way because I want to learn to just be able to watch it and be more neutral, emotionally be neutral.
Interesting. Yeah. So you're practicing emotional management. I could see why you might think that it's torturing yourself a little bit, because you could choose not to look at it, but you're actively trying to practice one of those key components of being a successful trader, which is learning to trade without emotion, or learning to trade with your emotions in balance.
Yeah. See, I call it torture. Tracy Ball calls it desensitization.
Yes, exactly. That's a good thought.
Yes.
Yeah, very, very interesting. A lot of traders struggle with that component, and adding in some automation like the Momo indicator or other types of automation, all the way up through working on your own algorithm, for example, so that it can be entirely automated, it is one way to deal with that. Some people will train themselves to, like you're doing, to be desensitized and be able to be neutral in those situations. Other people may struggle more with it, so they choose to work around it and do more automation so that they remove themselves from the equation. I think maybe, both of those can be suitable solutions for full-time traders.
Yes. And I think with new traders, I think making it simple and removing the fear from the market, like that's this big monster. We have these images of what we've seen about it. And so when I work with new traders, it really is like letting them know, like it could be simple, and as you learn more, you can change your plan. You're not married to it for life. You can change it, but don't change it because it didn't work 4 times. That's where the discipline and knowing your plan is very important. When I work with new people, I just try to, just like I said, just remove that fear and let them know it could be this simple. If you can know that green means buy and red means sell, and you know how to do it in your broker, do one share and let's get you in. Let's get you doing this. Because when you think about your outcome, the life you want to live, and not about not in like, people, if you want a new car, that's fine. You want what you want, but the more money we can make, it's not only for ourselves, but to help our communities, to help our family, to help others. I didn't know that the crime rate in Honduras was off the charts and people are killing each other for food, for money. And it's not out of greed, it's out of survival. And so it just shocked me that it's like, okay, what are we going to do to help that situation? How are we going to bring trading education into some of these countries and some of these communities, even some of our local communities where it's very poverty stricken because that's all they've known. And for us to have a skill and a dedication and a commitment to learn something that gives us access to unlimited funds. Where else can we have this type of access? So by taking this knowledge and sharing it, have first us making sure we're disciplined to do it, and then sharing it with others, including the children. I think we could really make some very significant changes in the world.
Absolutely, Sochi. There is nothing on the planet that is as unbiased, doesn't care what color, what gender, what nationality, doesn't care what we are, how much money we have. The markets will give us what we want if we learn how to use it properly. So it's a great tool that's accessible for anybody. And you're absolutely right. There's no reason for us to suffer in this world.
Right.
Yeah, for sure. Thank you so much.
Thank you
for your presentation. Love it. You guys put a good round of applause with a number 8 in the chat for this Sochi Rodriguez, please.
Thank you. That was amazing. Maybe the most inspirational presentation to last, right? That was the plan. That's how I structured the schedule, because I knew I didn't. Josh, I think, structured the schedule. So, but I do have a tip. What do you call it, Tracy? Decentralization.
Desensitization, yeah.
Yeah, right. So this is the truth. Now, bear with me on this. It's a little bit left field. Has anyone ever put a cold, pre-boiled egg in a microwave? See how long you can do it without it exploding. Your patience, your holding power becomes phenomenal. I have to do it every day because I try to get my diet in place. So I like to have 3 eggs per day. And so I cook them all in a batch. And then I learned the hard way. I put them in for a minute. I went away, come back, and they just exploded everywhere in the microwave. So now I try to put them in and I try to test it. You know, have to leave it for 30 seconds, comes up to 20, then hit the button, get out. So it's really good for managing trades, I think, now, because I could just hold for days. That's fine.
I don't even want to know what your wife thinks of this.
Well, I'm not allowed to go to the kitchen anymore, so I think that answers any question.
Wow. Thank you again, Xochitl, and thank you once again to everybody else that presented here. You guys are all amazing and wonderful. Once again, this presentation was brought to you by a few sponsors. Audacity Capital. If you are a successful trader, ambitious, and with a proven trading strategy who is looking to move to the next level, then check out the funded trader program at Audacity Capital. If selected for the program, Audacity Capital provides a fully funded trading account starting at $15,000 to begin trading Forex with, a 50-50 profit split, no liability for losses, a trading support network. They will double the size of your trading account every time you reach a 10% target. Pretty cool. To be considered for the program, you must have the ability to manage leverage consistently, keep account drawdowns under 10%, and demonstrate consistent profitability with strong risk-reward management. The cost, a one-time joining and administration fee of £199, a monthly platform fee of £99, which covers the cost of institutional liquidity provider, allowing traders access to tight spreads and predictable liquidity. Use the link provided in today's webinar for 10% off. And to learn more about Audacity Capital, the link is in the chat. All right. And our other sponsor is 24/7. 24/7 Wall Street LLC is a popular in the United States based. It's a popular United States-based LLC, which runs a financial news and opinion company with content delivered over the internet. The company's articles are republished by many of the largest news sites and portals, including MSN MarketWatch, USA Today, AOL, and newspaper and broadcast sites across America. The company publishes over 30 articles per day and has readers throughout North America, Asia, the Middle East, and Africa. The link is in the chat for your first stop when reaching the day's investing news and beyond. And I'll let you take motherhood moment again, Dean.
Well, this is brilliant for any mothers out there because it's a great blog that has a collection of tips and tricks, stuff like free coupons, how to save money, any environmental advice also. So yeah, I've only just recently found the blog, but it's been a good read for me.
Awesome. All right. RLT community. We have a ton of free resources. We've already explained all of the free content that we have. Check it out. There's the education is vast and non-stopping. Our YouTube channel has consistent uploads with new channel or new information all the time as well. There's access to a free trading journal as well as sample trading plans. There's self-study courses, printable workbooks, reviews, exams, certificates of completion, small group mentorships, one-on-one coaching, as well as global member support networks. Some of our free resources: fundamental analysis, technical analysis, day and swing trading, stock and options trading, algo, Forex, futures, investing for the long term, as well as crypto. So check it out. You can see an example of what the dashboard would look like and what types of courses are available to you. All yours, Dean.
Well, yeah, Josh put this in, and I'm going to skip over this. I'll tell you why. Because for me, it's a free webinar. Let's not pitch our services. If you're interested in joining RLT UK, then you can go to rltuk.co.uk and you can get all the information from there. If you're from the US, then just change the .co.uk to .com, and you'll find our American counterparts and so on for any person that is from Denmark and for India and Australia. So Josh is going to slap my wrist for that. But it is what it is. This is free content. We're not here to pitch our businesses, Josh. So up and coming events, what have we got? And this is news to me, and I should be in the loop with this, right? So yeah, we do have an open house which is coming up in April, so you get to see our services and what we offer as a community for free of charge. So I think that page is live, right, Josh? They can click that and go and sign up, and that's from April the 25th to April the 29th, which is awesome. And then we're also doing our first retreat, which again, Josh put this together. I wouldn't have a clue where to start. We are going to be in Croatia. So that's going to be the first one, and that's from June the 24th to June the 27th. Again, I think there's limited number of spaces available. So yeah, hit that link, and yeah, I will be there. So I assume I will be, if I'm invited. I'm not sure.
All right. And the recording of today's webinar, to access the recording, a PDF copy of today's webinar slides will be sent to the registered attendees. If you know somebody that's interested in this, please send them the link so they can register and they can get access to that as well. A recording of today's webinar is available for free on the RLT dashboard. And then a recording of today's webinar will be posted on our YouTube channel as well. So sign up today. That's the link. And like I said, share it with people that you think would get some value from it. All right.
Perfect.
Thank you so much for joining us. Yeah. Dean, it's been a pleasure.
Tracy, always a pleasure. I need to ask one last question.
Yes.
Now, you don't have to answer it, but who is your better co-host, me or DJ?
Oh, man. Do I have to answer this question?
No, you don't. I'm joking.
You know what? Okay. Dean.
I'll take that. I'll take that.
Dan, you saw me winking, right? All right.
Yeah,
okay.
I think everyone did. Yeah. Cheers,
there
Tracy.
you go.
But if you do want to join our services, yeah, we have a 20% off voucher, which I think we need to activate, right? So that will be done. And then there's some coaching involved with that also. So yeah, brilliant, everyone. Thanks for joining. Special thanks to Josh for putting this together and organizing everything. I know that took a lot of your time. And what a pleasure it's been. It's now 1 o'clock for me. So I hope everyone has a tremendous day, evening, night, wherever you are in the world.
Thank you very much, Dean. And we're going to hand it over to the one and the only Josh for some final questions, if anyone has any.
Thank you so much. And really just want to say thank you so much to Dean and to Tracy and to all of our panelists today for just spreading the gospel, if you will, the good word about trading and trading with discipline and trading in a way that can help make you profitable and that you can do it as a career and all the different ways that you can do it. If anyone has any additional questions, happily take them either right now and we can direct them to any of the panelists that are still available. Otherwise, you can reach us at support.uk@reallifetrading.com with any additional questions that you would like us to forward to panelists or any questions that you have regarding real life trading in the community. As Dean mentioned, we do have a 14-day free trial, and we have an upcoming free week in the month of April that I hope you will join us for. You can find that on our website by clicking on the free week tab or going to www.reallifetrading.co.uk/free-week. And otherwise, check out reallifetrading.co.uk/retreat and join us in Croatia this summer for 3 fun-filled and educational days. We'll be hanging out on the mainland of Split, Croatia, the weekend following the Wealth Conference being put on by Real Life Trading, Money Grows on Trees conference, that is. And if you're looking to spend some additional time after attending that conference, you're invited. If you're looking to just be someone who meets up with international traders, because maybe you're at a beginner level and you're not ready yet for a conference of that level, please do come check us out in Croatia. We'll be there the following weekend and hanging out around the days surrounding that weekend as well in Split, Croatia, trading together, learning together, a full day of education on Saturday, lunch provided. We have lodging available for those of you that are interested. First come, first serve. We have lodging within the venue itself, and there's a number of properties and hotels available on Airbnb, Booking.com, etc. nearby as well. So please do check that out, reallifetrading.co.uk/retreat. And thank you so much, everyone, for your hard work and effort and for being here. And just, everyone should be extremely proud of, I think, the content that we put out today and the product that we put out today. And I hope that you, the viewers, felt the same way. And thank you so much for joining us and tuning in.